What Moody's has done with its outlook for US debt, all in focus. The US futures picture then looks a little negative, perhaps to do with those that Moody's story and the shutdown narrative, but maybe also just to do with the amount we saw it rally on Friday. We saw strength there, we saw weakness on Friday in Europe's session, and so we expect something different here. You've just caught a glimpse of what was happening with the yen, and we have the yen at a new 2023 low, so that's certainly going to be something that we keep in focus today. And we'll also keep an eye, I think we had the yields on there, the two-year yield. We'll keep an eye on that, of course, in the context of what's going on in the US and the data prints we'll get out there. CPI inflation coming out of the US in, well, actually tomorrow. This is the futures picture for Europe then. Futures are pointing higher. This in contrast to the US, where futures are pointing lower. And this very much to do with the fact that we close in very different situations and states on Friday's session. So we are expecting something a little different here in the European market. So the European markets then bouncing a little from Friday's lows. You'll remember that Friday was dominated by pretty negative earnings stories, particularly from the likes of Diageo and Richemont. So the high-end luxury and also the aspirational luxury, all of that very much in focus during Friday's session, taking the edge off consumer goods companies and food and drink manufacturers. Well, today we look to bounce a little from some of those lows. So the FTSE is higher, the Spanish IBEX is higher, and some of the other markets that are opening up in this morning's session. On FX markets, then, we did have a little bit of a dollar weakness coming in at the back end of the last hour, but nothing too drastic. As you can see, there's some grey boxes when it comes to FX this morning. Here's the sovereign bond story, a lot of the European story, and we see the UK joining the fray here, and the US story has been, or is this morning, around buying of sovereign bonds, and some of those yields coming a little lower. We also see slightly weaker energy prices in the shape of oil. We'll keep that in mind as we look at the sector picture and what we have in the London market. Let's roll on and look at these sectors then and where we are this morning. Not a great deal of themes to trade around. I mean, there are some big headline stories around the potential for shutdown at the end of the week. What will Moody's do with the last final AAA credit rating over in the United States? All of that being talked about a lot, but not necessarily driving sentiment too much at this point. Just looking for where energy trades, well, pretty flat actually, so not falling too much, but underperforming perhaps compared to other sectors. Travel and leisure doing pretty well. We are at the Dubai Air Show, and that sector very much in focus, certainly the travel side of things, the manufacturing side of things, and the health of that sector. Banks, financial services, industrials, all gaining this morning. So the balance of sectors seems to be to the upside, and we are seeing a bit of a bounce back from Friday's losses on European equity markets this morning. Let's get to Sam Unstead, who joins us now from the Markets Today blog. He can talk about some of the themes that are driving sentiment this morning. Sam, let's start with one of the big stories, of course, around the Fed, and that is, when are we going to start to see cuts coming through from the Fed? And of course, we still have a Fed that is penciling in another hike. At least if you look at the dot plots and the market expectations, some in the market think we'll see that, many don't. But when it comes to cuts, we have a divergence from different banks on Wall Street as to when those cuts start and how long they last for. What do you make of that conversation?
Yeah, so this morning we're talking specifically about Morgan Stanley and Goldman. Morgan Stanley see cuts coming sooner and then deeper cuts over the course of the time that the rates are being cut. And then Goldman Sachs sees shallower cuts. They see them coming later. And I think this debate is just going to start to, is going to continue. I think, as particularly you mentioned, Anna, we've got inflation data coming this week. There are risks around the shutdown, this week. That probably won't feed into the Fed too much, but the inflation data certainly will, and I think that's when we'll start to see which one of these two banks that the market agrees with the most. You mentioned we've got inflation data out of the US, which we do. We also expect a slew of data out of China, don't we? So that's going to be a focus for us midweek. Now, what about the latest clues out of China? Because we've got a story that talks about Chinese consumption, the recovery in consumption, losing momentum. I mean, this is not what people wanted to see after a lackluster summer. No, that's right, and I think, and actually, this is something we've seen through earnings season. that yes, there's been a kind of recovery in China for many of the companies that have reported, particularly in Europe and the US, but not particularly good. It's varied by sector. In a lot of cases, there's been a recovery, but it hasn't been as good as expected. And so, yeah, the consumption data we got out this morning, maybe not enormously surprising, but it again, as so much data does from China, highlights this kind of underlying risk that it poses.
Yeah, and it ties into that luxury theme, or the aspirational luxury theme that we were talking about on Friday when we talked about Richemont, Diageo, all of that disappointment. We'll try not to rehash over all of that. Let's talk about what else is going on in China. And because we've had weak data out of China, then a lot of people are thinking about whether we get further stimulus. And we have a story out this morning suggesting that we could see liquidity support being added. And that's what our guest from HSBC was talking about in the last hour, talking about liquidity support, but also talking about structural reform in China.
Yeah. And again, this is kind of a question that we talk about very often. Not just what kind of support there's going to be, but when is there going to be that, as we've mentioned many times, that big bazooka of stimulus that's really going to start to change the picture there. And at the moment, we still don't really have any sign of that. You mentioned there's quite a lot of data coming out of China over the course of this week. That could start to provide a bit of a clearer picture on what may or may not need to be done. Whether it then does actually get done, another question.
Okay, Sam, thanks very much. Thanks for the update. Sam Unstead from the Markets Today blog. You can find the Markets Today blog by going to the front page of the Bloomberg UK website. You can get to it there, or you can go to TLIV Go on the Bloomberg terminal. Really good rundown of all that's happening in the UK, in the markets, all of the UK news flow throughout the day. Let us get to what we're watching then this week in terms of the trading agenda. Today we're at the Dubai Air Show. We've just been bringing you coverage from there. It gets into full swing. Bloomberg's Guy Johnson is there, and we'll have interviews with more of the big players in the aviation industry. We already heard from Boeing this morning. Tomorrow we'll get UK jobs data, third quarter Euro area GDP, plus US CPI for the month of October, so a heavy macro day. Early on Wednesday, there's plenty of data from China. We were just discussing that with Sam, including industrial production and retail sales numbers. We'll also get UK inflation data for the month of October. Then on Thursday, US retail giant Walmart is set to report earnings, and that's going to be in focus, Mark was explaining, because of the attention being paid to the US consumer and its resilience. Then on Friday, there's an update on UK retail sales, so similar themes in focus there. And finally, ECB President Christine Lagarde is also due to speak at the Frankfurt European Banking Congress. It's going to be a busy one. Let us tell you what's coming up on this programme. Novo Nordisk surges after a recent trial showed that its weight loss drug cut heart attacks and deaths in obesity patients. We will look at more stocks on the move next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
could face bigger challenges next.
It was going to keep real World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. We are just coming up to 9 minutes into our European trading day. You see that European equity markets making some modest gains this morning, trying to recover from some of the losses of Friday. We were weighed down then by Diageo and Richemont and all that consumer-facing news flow. Let's find out what is moving stocks this morning and leading that bounce back. Joe Easton joins us from our equities team with a briefing. Joe.
So we are seeing Novo Nordisk rising once again, Anna, over in Copenhagen. As I said earlier, this drug data released over in Philadelphia showing a reduction in heart attacks in patients that don't have diabetes that were using Wegovy, the weight loss drug, once a week. And that is one of the best performers we've got today, up around 3.5% at the moment. Now, this is also weighing on Fresenius Medical as expected, the maker of dialysis machines, the biggest maker of those in Europe. The drug from Novo also showed some strength in kidney disease as well, which is a negative for Fresenius, according to analysts. We saw that stock plunging a few months ago on those exact concerns, and that does seem to be the theme of the day in healthcare as well. BAE Systems, a big jump in orders year to date. They did do around £30 billion worth of orders in terms of defence systems this year alone. That stock coming up, it is already trading up more than 25% already this year, so perhaps not that much upside for that one. We've got British Land gaining as well. They've got earnings out today. They have actually cut the value of some of their portfolio, but the profits are actually not looking too bad for those stocks there. They are the owner, of course, of a lot of offices around London, including UBS and also TP ICAP. Also the owner of Broadgate Circle, the busiest place for Thursday night beers in the city, of course, for them. In terms of other real estate stocks, we're also looking at SBB today, the Swedish company. Now, they have cut the value of their portfolio by around 10% today. A big trim for that one. That is one of the worst performing stocks we've got this year, given the concerns around capital for that company at the moment. Phoenix, however, in UK insurance is jumping. Now, they've upped their capital targets for the year in a statement out today. It's been a weak earnings season for insurers, given the worries about natural catastrophes, which we did a bit on last week, but that does seem to be a bit of a positive finally coming through from that sector over the past few weeks. We've brought up ST Micro because we had TSMC over in Taiwan, the biggest maker of ready-to-order chips, reporting its first monthly gain in chip sales since February, and that's really feeding through some positivity. We're seeing ST Micro up around 1%. I also saw Infineon and ASML were ticking higher when I last checked. In terms of a big decliner here in London, we've got FDM. This is an outsourcing company, does things like call centres and also employee services, putting out a profit warning, blaming the weaker economy and also geopolitical events, saying that clients are delaying their decisions on projects. So FDM, it's about a £500 million market cap, so still quite a big company, dropping 14% in London today, so a pretty big mover in terms of the UK mid-caps. Finally, we've got Bilfinger in terms of the last of the earnings today. This is over in Germany, construction company, negativity across that sector at the moment, but they are actually looking a bit stronger than expected, topping some of the analyst expectations in terms of the earnings per share and also the net income as well. And then the last three are all ratings changes. So we've got Banca Monte de Paschi raised to buy over at Deutsche Bank. Now that's interesting because there was a separate report about how BPE is no longer looking to invest, the Italian banking rival, no longer looking to invest, but Deutsche Bank says you should still be buying that stock in terms of the Italian lenders. The other bank, this one has a rating change over at Citi. It is Garanti over in Turkey. We don't do Turkish stocks very much, but they're cut to sell over at Citi. Citi says that the weakening lira will be an issue for that stock over the next year, so that one down around 3%. And then finally, Doc Martens, heading into Christmas, gets a downgrade over at Barclays. Barclays go equal weight. They've been recommending you buy the maker of bootmakers for a couple of years now, but that stock is declining around 2%. Barclays putting the boot into that one this morning, Anna.
Oh, very nice. Thanks very much, Joe. Joe Easton, starting the week the way he plans to continue with the puns. Thanks very much, Joe Easton, with a briefing on what's moving in these markets. Now, the US is still facing a risk of a government shutdown at the end of this week, despite a new compromise plan set out by Speaker Mike Johnson. Congress has just days to pass a new stopgap bill before funding for the federal government could run out. Joining us now with a view on the markets, Deborah Cunningham, Chief Investment Officer for Global Liquidity Markets at Federated Hermes, passing through London, and we're very grateful that she stopped by to speak to us. Deborah, nice to have you with us. Thanks for coming in. Let's talk about the sort of broad risks to market sentiment at the moment, and one of those may be coming from the possibility of a shutdown at the end of this week. How does this develop? What relevance does this have in your mind? Do we continue to put it to one side until we get sort of 24 hours before and then everybody talks about it? How is this going to work through?
Well, it's certainly not anything like the debt crisis that we were facing back in the summertime, where the potential for U.S. debt repayment and interest payments on the debt was at stake. Instead, with the U.S. government shutdown, what in fact is the end result is furloughed workers for non-necessary services. That does not include debt repayment. So from a functionality standpoint, the Treasury market, the bill market, the broad fixed income market continues to go forward. Where the impact would come would be depending upon how long the furlough lasts for the non-essential workers. If it's more than a few days, you have some impact that can be felt from an economic standpoint, and from where we are already with rates in the 5+% camp, there's a risk of economic slowdown and potential recession. This could add to that.
Okay.
But again, not the immediacy of a debt showdown like we saw in the summertime.
Okay, that's really interesting. The contrast with what we saw over the summer important. And let me ask you about what this, though, another knock-on impact of this could be another downgrade to US debt from this time Moody's. So Moody's talking about the budget deficit and also that political polarization that we see on display once again, talking about these as contributing factors as they downgrade the outlook for US debt, and they could remove the last AAA rating for US debt. How significant is that? Because on the one hand, you could argue it's the last one, therefore it is really significant. On the other, you could say the others have gone already, so it's not that significant. How would you view it?
I think it's the latter more than the former, Anna. Basically, when S&P downgraded U.S. debt to AA+ several years ago, that was where the biggest impact was felt. Now, granted, there's more debt outstanding today, and with the Fitch downgrade much more recently, and now the Moody's outlook change, you could potentially argue that all three may have a little bit more of an impact than just one or 1 and 2. Ultimately, though, it seems the concerns being more what's happening from a congressional perspective and the dysfunctionality from a lawmaking standpoint is the concern rather than the actual quantitative financials. So I think from an impact as much on the economy, from an impact on where rates are at this point, I think that's behind us. This will not have much of an impact.
Okay, really important context. Deborah, let me ask you about the US economy then, more broadly, and where we are for you, because there's been a lot of talk about when we get to the recession, if we get to a recession, might this be a soft landing? How would you characterize what we're seeing at the moment?
At this point, we are in the camp that we will not get into a recession, that we will, just modestly bump along, maybe a quarter of modest to no growth, a quarter of modest to negative growth, but nothing that, pieces together to actually form a recession. It certainly seems as though the strength from a consumer perspective in the U.S. continues to drive the bus. And with household net worth at all-time highs and demand for goods and services continuing to be pretty strong despite the interest rate increase of over 500 basis points in the last year and a half, we still feel like the recession is something that can be avoided. Okay,
that's interesting. So not too much fear around household balance sheets then, perhaps. What about corporate balance sheets at this point? You make the point in your notes, in fact, earlier on this month, I think this was, about weakness in corporate spending. And I wonder what you're seeing in capital expenditure, whether you see trends to watch there. Is that telling us anything useful about where the US goes from here?
Certainly, when you look at certain segments of corporate America, there are weaknesses. You've got some of the goods goods and services producing sectors that initially came out of COVID very, very strong. Goods continued to, sort of peak at that point, and now services have taken over. But manufacturing seems to be doing okay. Certainly the financial sector is a surprise on the positive side. From the banking sector, we've seen higher earnings, and at this point there are concerns about commercial real estate. That's a sector that is questionable from its tenacity going forward. But not all commercial real estate is created equal. If you're in a multifamily housing sector, it's doing great. If you're in a strip mall, maybe not so well.
Okay, yeah, so there's a lot of contrast there between the different parts of the real estate market. What about where the Fed heads next then? With that as the backstory, you don't think recession. You set out the possibility that we could see the Fed actually taking its hiking into next year. Other guests perhaps arguing that maybe they're done and we're going to see cuts. Certainly Morgan Stanley talking about cuts coming as soon as the middle of next year. So do you see a situation where we could get hikes and cuts from the Fed next year?
We think they're probably at their plateau, but we are also believing the higher for longer sentiment. So maybe if there's another 25 basis point increase, that could be the case if we see the fourth quarter coming in from an inflationary perspective, especially core inflation, which seems to have been a little bit stickier so far in its prints. Maybe the Fed takes one more precautionary stab and raises interest rates another 25 basis points. But even if they do, it's not really increasing in our minds the likelihood that they will be cutting rates anytime sooner. The higher for longer rhetoric lasts well into 2024, and it's our thoughts that definitely not until late in the second half do you start to see a Fed considering lowering some of those rates.
Okay. Great. Good to get your perspective. Thank you very much, Deborah, for coming to visit us. Deborah Cunningham, Chief Investment Officer for Global Liquidity Markets at Federated Hermes, on set with us here in London. Coming up on this programme, with more than 90% of European companies already reporting, we will get your third quarter earnings scorecard from Bloomberg Intelligence next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets. China open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Bloomberg Markets Today, 22 minutes into a European trading day that is trying its best to bounce back from the losses of Friday. Not fully achieving that, but certainly making some effort in that direction. Now, companies representing almost 95% of the European market cap have reported their results as we wrap up third quarter earnings season. So how have they been doing? Let's get a roundup of the earnings story with Tim Craighead from Bloomberg Intelligence, who joins me here on set in London. Tim, good morning. So you've mentioned midway through the reporting season that the reporting season had started poorly, I think. So bring us an update. How's it gone since?
No better.
Right, okay.
If you look at the stats, it looks on the surface to be okay. Almost 50% beat, almost 40% miss, a little bit in between. But that's as bad of a scorecard as we've seen since the pandemic. And within that context, you want to look versus the U.S., for example, and right now we're running close to 80% beat. So, you know, it's a wide difference. And where this is taking us now is an earnings contraction of about 12% in this quarter. If you back out energy, which is a big deal over here, obviously, it's more like 3 or 4% of an earnings decline. But it is the start of what appears to be a couple of quarters of an earnings recession before we pick back up again in 2024.
Okay, that's interesting. The contrast between the US and Europe then and that earnings recession could take on very different dynamics in different places. So last week we had a couple of really big losers just on Friday's session alone. We had Diageo and Richemont. What struck you as interesting from there, because both of them seem to have a sort of outsized influence on other companies within their sectors?
Yeah, no doubt. And yes, there's a positive and a negative. The negative, as you said, Diageo, Richemont, high-end consumption is under some pressure, or as I think one of the CEOs had said, moderating. And
euphemistically.
Yeah, exactly. And whether it's watches, whether it's bags, think, you know, Gucci from Hermes, or whether it's other products, you know, there's weak numbers from LVMH earlier. There's clearly a high-end pressure, and you could say that same thing with Diageo, with high-end, high-priced whiskeys and spirits. The thing when this happens, when there is softening in some of the bigger markets, whether it be U.S., whether it be China, some other problems then can open up. And, you know, Diageo, the thing that was you know, surprising was Latin America.
Yes.
And you know,
who would have... fell 12%.
Yeah, who would have cared about Latin America? But you care because everything else isn't, you know,
great.
You know,
Yes.
Exactly.
Absolutely. And one area that hasn't been great from a macro perspective is China. Briefly, Tim, what does exposure to China mean for European corporates right now?
Our work on this, 80 companies out of the stock 600 have significant exposure. It adds up to about $450 billion in revenue. It's a big number for roughly 30% of the market cap of the stock 600. Autos, luxury goods, consumer products are all showing signs of weakness or stress or higher competition. And the fourth quarter will be a more difficult comparison than the third quarter was. So it's 2024 might be a positive.
Yeah.
But we're not there.
We're not there yet. And we focus in on the quarters still to come then. Tim, thanks very much. Tim Craighead from Bloomberg Intelligence with a look at the European earnings story. Coming up, we'll be back at the Dubai Air Show. We will be speaking with the head of one of the world's newest and most ambitious airlines. Riyadh Air CEO Tony Douglas joins us next. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Markets Today. We're 30 minutes into our European trading day. Here are your top stories. Moody's threatens to remove America's last remaining AAA debt rating, citing political polarization as the risk of a U.S. government shutdown looms again. China is said to be weighing an end to its freeze on Boeing purchases ahead of Wednesday's meeting between Presidents Biden and Xi. We will bring you the latest on the summit. Plus, Boeing versus Airbus, the two great rivals of the skies, battle it out for orders at the Dubai Air Show. We'll be speaking to the CEOs of some of the world's biggest airlines. Welcome back to the programme. So, half an hour into the first trading day of the week, and we are trying to rebound from Friday's losses on European equity markets. We have European stocks then gaining a little this morning. The Stoxx 600 as a whole up by 0.5%. The DAX up to, about 0.25%. The FTSE up by 0.5%. And really, the story around Friday very much informing the story of Monday, because on Friday we saw European equity markets weighed down by some of those negative earnings stories we were just discussing with Tim Craighead, the likes of Diageo, the likes of Richemont, the consumer fully in focus. That was Friday. We tried to bounce from that today. In contrast, US stocks did really well during Friday's session, so the futures picture over in the US looks a little bit weaker. We have US futures down by 0.3%, Nasdaq futures down by 0.4%. Let's take a look at some of the sectors on the move this morning to give us a sense of where we are heading. We saw energy was a bit of an underperformer last time we checked in, as the oil price is down another percent at 80.66. Generally a story of weakness even at those levels above $80 seems to be the theme of late. Technology up 0.6%. Some of the biggest moving sectors, well, travel and leisure actually, topically enough, is one of the best performing sectors this morning, up by 1.4%. And that takes us nicely into the Dubai Air Show, which is currently underway, and we're seeing some major deals come into focus where tens of billions of dollars they are said to be in the wings at least. Bloomberg understands Boeing and Airbus are both poised to unveil significant orders, along with the more established names at this year's air show. Is one new airline attempting to disrupt the market. Riyadh Air, launched by Saudi Arabia's Public Investment Fund, the PIF, is in the process of building a fleet from scratch. The carrier has ambitious plans to take on regional incumbents, including Emirates and Qatar Airways. Let's get now to Bloomberg's Guy Johnson, who is with a guest from Riyadh Air. Guy.
Yeah, we're joined by Tony Douglas. He's the CEO of Riyadh, as you've just been outlining. They are about to launch into what is a very busy market. And I apologise, we moved out onto the tarmac. It's a little noisy out here, but we get to see Tony's plane and his livery. Tony Douglas, nice to see you. Thanks very much indeed for your time today.
Guy, thank you very much. And as you say, a bit noisy, but who doesn't like a good air show?
It's so far it's turning out to be a busy one. look, you're launching into some of the most aggressive inflation this industry has seen in decades. You've now got geopolitics to contend with as well within the region, the war up in Israel. Are you still on track for your launch?
So we're very much on track, and the reason why we're here at the Dubai Air Show today is to reveal our second livery. It's already gone viral on the internet, and behind me is our first livery that we released earlier this year at the Paris Air Show. But also, just behind me, our first ever EV car partnership with Lucid, so all about sustainability as well. But in terms of the market, there's always challenges in aviation, but Riyadh, obviously capital city of the Kingdom of Saudi Arabia, fastest growing economy in the world at the moment, and quite frankly, Guy, it needs better connectivity.
Okay, so let's talk about how this is going to work. You've already ordered some aeroplanes from Boeing. We understand you're about to order some more narrow bodies from Boeing, but they're going to take a while to arrive. So you're going to have to launch, you're going to have to lease. When I talk to the lessors at the moment, they tell me that rates are going through the roof at the moment. Aeroplanes, if you can get them, are very expensive. How's that affecting the business model?
Well, you've made a few assumptions in your question there, and perhaps not all of them are the assumptions we're working to. First of all, we will probably not be leasing any aircraft. We will commit to a big fleet, 72 787s already on order. What you are right about is in a number of weeks' time, we will announce a sizable order for narrow-body aircraft. What we'll then have is a fleet that will allow us to connect to over 110 cities by 2030.
You are relying on Boeing delivering. How certain are you that that's going to happen? All of the major OEMs at the moment are having some significant difficulties. Again, does the business model hold together if you don't get the aircraft you need?
Well, I'm relying on Boeing for the 787s delivery. That's the only order that I've publicly announced at this stage. But what we've made quite clear to Boeing is we're special. And what does that mean? It's not that we're special in terms of personalities. We're a startup. Because we're a startup, the biggest one in over 30 years in this part of the world, we don't have a plan B. So if any OEM, doesn't matter whether they're an airframer or anybody else, can't deliver on their commitments to us, it's not as if we can extend leases with aircraft, because we currently don't have any of them as a startup. So we've made it quite clear that that is a fundamental characteristic of how we're contracting with them. But the important thing is this: everybody wants to be a part of this story right now for the reason that I've already mentioned. It's the biggest startup within the last 30 years.
You mentioned a narrow-body order. We thought it might come at the show. You're now telling me in the next couple of weeks. So by Christmas, by the end of this month maybe, we're going to have a narrow-body order from Riyadh, right?
There'll certainly be a narrow-body order before the end of this year. It's a number of weeks away. Interestingly, Bloomberg didn't speculate the right outcome for this show. We never planned to announce it here. But the good news is the deal is done, and it won't be long before we do announce it.
The deal is done?
The deal is done.
Okay. Boeing, you are a Saudi airline. Does that mean you have to buy from Boeing? Does that mean you want to buy from Boeing?
So we can now have perhaps a little bit of fun in terms of media backwards and forwards. Is it Boeing? Is it Airbus? What I will tell you is it's one of them.
Okay. I probably would have assumed that. But is there a geopolitical overlay in what you're doing? You've talked about the fact you want to get Saudi out there. You want to put Saudi on the map in an aviation way that it hasn't before. Does geopolitics come into that? Does Riyadh's relationship with Washington, D.C. affect what you do?
It's a very clear play. You evaluate technical performance, the commercial contribution, but importantly, back to your earlier question, this is all about also getting access to deliveries. We'll be announcing a really sizable order. Because we're a startup, we don't have a plan B. It's about having assurance that they can be delivered on time and they can fulfill the network requirements that we've got.
Are you going to be able to get the pilots, the crew, the engineers to be able to staff and look after these aircraft? Again, you look at what's happening around the world, all the major airlines are paying up and paying up handsomely in order to recruit staff right now. You're a startup. That comes with an extra cost maybe. You're in Saudi Arabia. Saudi Arabia has a reputation for writing big checks right now. Are you going to have to write big checks to get the staff you need?
So if any of your viewers go onto reader.com, what you'll see is a careers page. Now, the reason why I mentioned this is that careers page only went up live on the 12th of March this year, i.e. 9 months earlier. Up to now, we've had 855,000 people post all of their CVs and their certifications to be considered as part of the Riyadh family. 146 different nationalities, 52% female, but 45,000 pilots. Now, I'm not saying that that is any guarantee of success, but what I can say is 855,000 people from all around the world want to be a part of that story, because it's the newest story in commercial aviation.
So you're telling me you are not going to have to pay above and beyond what the rest of the industry is paying in order to staff this airline?
It's a market rate. We'll pay what the market rate is.
Okay. So you're confident that's going to happen. Just finally, just back to the geopolitics. Do you see this region becoming harder to operate in?
So I actually see that there's always challenges in aviation. I've been involved one way or the other for over 30 years, and during that time, like everybody else, we've seen, geopolitical challenges, economic challenges, obviously most recently pandemic. The list goes on and on and on. As I was explaining to colleagues only last week, the only constant in commercial aviation is ambiguity. It's the same for everybody else. Right now, we don't see any softening in demand within the GCC countries. And if you look at all of the analyst views over the longer term, what they see for aviation is continued growth.
Tony, great to see you. Thanks, sir. Nice to see you.
Thank you, guys.
See you again soon. Tony Douglas, the CEO of Riyadh Air. Anna, from the Dubai Air Show, back to you.
Guy, thanks very much. Bloomberg's Guy Johnson on the ground for us at the Dubai Air Show, speaking there with the Riyadh Air CEO. Guy will have many more interviews for you from the air show throughout today, including interviews with the Emirates President, Tim Clark, Christian Scherer, also the Airbus Chief Commercial Officer. Those are just some of the highlights coming from the Dubai Air Show. A real focus on the scale of the orders that we might see coming through from Dubai. Let's just get a quick update on UK politics, because this is a fast-developing story. We're seeing a few headlines across the Bloomberg terminal to be aware of. Firstly, from the Times newspaper, Stephen Swinford, so this is their reporting, not ours, but he is saying that Suella Braverman has been sacked. We are also now getting confirmation, actually, so this is an official being quoted by Bloomberg colleagues that saying that the UK's Sunak has fired the Home Secretary, Suella Braverman. The Press Association going on to say that the UK Conservatives will conduct a ministerial reshuffle. Well, that would make sense. If the Home Secretary has been fired, then you would need to see some sort of reshuffle. This, of course, is in the context of the criticism that she levelled at pro-Palestinian protesters. That was controversial. It was criticised. We then saw some very violent scenes involving counter-protesters in London over the weekend. There was also talk of her not clearing some of her comments about Palestinian protesters through Number 10, and so all of that added up to a lot of questions being asked about whether she would survive the week. We were then moving towards a verdict from the Supreme Court, which meant that the timing got a little bit difficult for the Prime Minister, and so perhaps in the context of all of that, not too much of a surprise that if this is what we're hearing for an official now, then that Sunak has fired his Home Secretary, Suella Braverman. So will this open up a period of infighting within the Conservative Party? That's the question, because she represented the right of the party, and that's what she was doing in the cabinet, really, sort of bringing that side of the party into the front bench. What happens now from that perspective? Coming up on this programme, then, we will get to other matters. Geopolitical, military talks and economic ties are among the priorities for US President Joe Biden and China's Xi Jinping when they meet in San Francisco this week. We will discuss the meeting between the world's most important leaders next. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
This is Markets Today, 8:45 here in London, so 45 minutes into your European trading session, and bouncing really from Friday's losses seems to be the major theme, bouncing a little at least, even if we're not making up for all of those losses of Friday. Now let's talk about geopolitics. President Joe Biden and the Chinese President Xi Jinping are expected to meet on Wednesday on the sidelines of the APEC summit, which is taking place in San Francisco. The gathering will be the first face-to-face conversation in a year between leaders of the world's two largest economies. U.S. National Security Advisor Jake Sullivan has confirmed that one of President Biden's priorities for this summit is restoring military communication. For more of the detail and the big picture, let's bring in Bloomberg's China government and economy editor Jill Desis, who can talk us through what we're expecting. Let's start there, shall we, Jill? What are we expecting from this meeting between Biden and Xi?
Hey, Anna. Well, I think that Jake Sullivan there pointed out that restoring military communications and ties between these two economies is incredibly important, at least for the U.S. side. There's a lot, obviously, that they have to talk about that's created major geopolitical strains, whether it be tensions in the Taiwan Strait. As of recently, some dust-ups between China and the Philippines has also gotten the U.S.'s attention. They're paying very close attention to what's happening in the South China Sea right now. And then, obviously, the unfolding war between Israel and Hamas is also, I think, really, really heavily on Biden's radar, particularly what China's role could potentially be in helping to lessen tensions there in the region, given China's relationship with Iran in particular. And so I think all of that sort of combines from the U.S. side in terms of really important things that they're going to want to be looking for out of this meeting, particularly because Xi Jinping ultimately fired his defense minister this summer, and that's a vacancy on the China side that remains open. So we'll see what happens there. I think on the China side, certainly economic ties is a major factor here that they're going to be looking for. We've seen some slowdown within the world's second largest economy this year. We've also seen a pretty significant pullback in foreign direct investment in China, and also a lot of waning confidence among foreign businesses and private enterprise in China. And I think that on that side, sort of restarting some of those relationships or trying to project this idea that foreign businesses should be confident in China is probably going to be on Xi Jinping's agenda.
Okay, so that's what we expect. Xi is meeting with American business executives as well, so not just a sort of leader-to-leader conversation. What is that going to bring us, do we think?
Yes, Anna, I think that that's really sort of hitting this point on this idea of projecting the fact that what Xi Jinping wants to project is that China is a good place for foreign businesses to invest and sort of build in. We've seen some pretty big pullbacks within the foreign business community in China over the past couple of years. Part of that has obviously been due to the COVID restrictions that they had in place for so long, really only unwinding those at the end of last year into early this year. But another part of it is the really, really uncertain regulatory regulatory environment within China. We've seen a lot of scrutiny among Chinese officials against businesses in the country. Some major regulatory changes over the past few years. That's all led to this environment in China that it's a really uncertain place for foreigners to do business. They're not really sure what the landscape's going to be looking like, what competitiveness, particularly with local firms, domestic firms in China, looks like. So I think the fact that Xi Jinping is willing to sit down and talk to American business executives to talk through how exactly that idea of like reprojecting confidence is really, really important from his side. And I think that's maybe what you're going to be seeing out of that business dinner later this week.
And we've been covering the Dubai Air Show, so aviation in focus anyway this week. And in the midst of all of that, China's considering, we understand, ending a freeze on Boeing with the 737 MAX deal, because they had for some time said they wouldn't buy any Boeing aircraft. Could the meeting then lead to a breakthrough for that sector?
Yes, potentially. So yes, I mean, that's what we're hearing, is that an announcement could come as soon as this week in San Francisco. If we see any movement there, of course, the Boeing MAX 737 deal has been long languishing at this point. China was the first to ground those planes after those two air crashes. Way back when. We haven't really seen them restart those types of sales. I think Boeing at this point has certainly lost ground to competitor Airbus in China. I think any kind of deal would project that idea of resuming a lot of business with American firms in China. So that's potentially one landmark we could see this week.
Jill, thanks very much. Bloomberg's China government and economy editor Jill Deasis. Sticking with aviation themes, a statement from Airbus. We've been waiting for confirmation of a story we carried over the weekend that Turkish Airlines were going to order 350 aircraft. Well, we've got some clarification and confirmation, rather, that Airbus has reached an agreement in principle with Turkish Air, but we don't know the size of it yet because that accord is said to be of significant order. They're ratifying the agreement, Airbus says, and will communicate in the next days. So might that be a slight disappointment in terms of timing for the Dubai Air Show, but not having much of an impact on the share price right now. It was higher and remains so. Coming up on the programme, we'll talk about the Fed. Goldman Sachs and Morgan Stanley diverge on their forecast for Fed rate cuts. We'll get more with Ven Ram from our Markets Live team. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg. This is Markets Today, 8:53 here in London. European stocks go slightly higher after Friday's sell-off. Let's talk about what's happening in the markets. Ven Ram from the Markets Live team joins us. Ven, a quick word on the Fed then. We have diverging forecasts as to when the Fed is going to start cutting rates from the likes of Goldman Sachs and Morgan Stanley.
Absolutely, Anna. I think that, pretty much everyone is predicating their forecasts on the fact that the Fed will start cutting rates in 2024. That much is not in question because the Fed themselves say factored in 50 basis points of rate cuts in the September dot plot. The question is, how far will they go? Morgan Stanley thinks that they will go really deep as to take down the Fed's funds rate to 2.375, the mid rate. I don't think that's happening because if you look at the neutral rate that has gone higher this year, and even if you factor in 2% inflation, which the Fed doesn't see by 2025, even with those forecasts, it's unlikely to see a 2.375 Fed funds rate.
Okay, Ven, thanks for the brief update. Ven Ram from our Markets Live team. Let's move on from what's driving the markets to what's driving politics. We've had confirmation this hour that the Prime Minister, Rishi Sunak, has fired his Home Secretary, Suella Braverman. Joining us now with instant analysis, Therese Raphael from Bloomberg Opinion. Therese, nice to speak to you. I suppose the first question is, anybody surprised that we've reached this point?
Yeah, this was pretty well trailed. I think there's been speculation for days now about how long Sunak could keep Braverman in place. In a way, he was damned, whether he did and damned if he didn't. Not sacking her made him would make him look weak. He'd have a pretty openly insubordinate cabinet minister sitting next to him. I think he tried for as long as he could to sort of maintain the appearance of unity, but it got too much with her Times article last week, going after the police. So, sacking her at least restores some appearance that he's in control, but of course it creates a pretty, vocal and potentially, noisy focal point for the backbenchers. Yes. And that's something that, is going to be a concern for him.
Yes, is this going to herald a phase then, Therese, as close to the election as we are, even if we don't know when that might exactly be, a phase of more open division within the Tory party? Because she represented the right and that's why she was there on the front bench.
Yeah, I mean, I don't think the divisions within the Tory party are very much under wraps and haven't been for a while. So, yeah, I think we will see a very, messy, divided party on a number of issues as they head toward the election, and very likely a conservative leadership contest eventually. I mean, I think there's speculation that there will be, letters against Sunak and, potentially a challenge to him early. I would tend to think that, it's in nobody's interest really to push that. But for sure, she is going to be noisy in the opposition. But, he's got the Rwanda
Therese, thanks very much.
Wednesday.
Yes, absolutely, the Supreme Court. Therese Raphael, Bloomberg Opinion, thank you. We're just getting further reports, of course, a reshuffle required then if you sack your Home Secretary. We are hearing from The Sun newspaper in the UK, so not confirmed by us just yet, but James Cleverly to be the new Home Secretary, according to reporters at The Sun. He's currently the Foreign Secretary, so we'll see who takes on that role, if that proves to be accurate. A lot of reshuffles then to be expected in the UK. That's the politics. More on the markets coming up shortly. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Welcome. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. The UK Prime Minister Rishi Sunak fires his Home Secretary, Suella Braverman, after she criticized the police over the handling of the protest marches. Now, Moody's threatens to remove America's last remaining AAA debt rating, citing political polarization as a risk of a U.S. government shutdown looms again. Plus, China is said to be weighing an end to its freeze on Boeing purchases ahead of Wednesday's meeting between Presidents Biden and Xi. We'll bring you, of course, the very latest on the summit. So first thing is first, we have a lot to get to, especially in politics. But let's quickly check on the European markets map. But now, for the moment, you can see a lot of these markets are actually holding on to gains. I have the FTSE gaining some 0.7%. We're seeing similar gains in Milan, but also the CAC 40. European stocks really rising at the start of the week that are going to feature some pretty key readings in inflation in the US and the UK, which, of course, once again, investors will try and study very closely for indications of interest rate policy. Just one currency that we need to keep an eye on. I mean, we keep an eye always on all currencies, but the yen is actually feeling some pretty big moves, falling to a fresh 2023 low against the dollar. Again, raising concerns, actually, that authorities will intervene to support the currency. Now, the U.S. still faces a risk of a government shutdown at the end of this week, despite a new compromise plan by the House Speaker, Mike Johnson, that leaves out hardline conservative priorities. Now, a shutdown would threaten a downward U.S. credit rating adjustment by Moody's, which has already lowered its credit outlook. Now, in a note on Friday, it basically says continued political polarization with U.S. Congress raises the risk that successive governments will not be able to reach consensus on a fiscal plan to slow the decline in debt affordability. Now, for a look at all of this, let's bring in Bloomberg's Jill Dices with more. Jill, good afternoon. Good morning. Thank you for joining us. The government shutdown is looming on Friday. So what's in the stopgap bill?
Yeah, so I think with this particular bill that Mike Johnson's put forward, the idea would be to essentially just extend, I think, some services for some government agencies through about mid-January for a few, and then the beginning of February for the others. This does leave out some things that, as you mentioned, some really ultra-hardline conservatives are really looking for, including an immediate 30% cut to spending. It does also leave out, so I think that's in the case where you might see some pushback from the ultra-conservative side. It does, though, leave out some other facets, including spending for Israel and for Ukraine. So at this point, the sort of bill where it's like we might be able to see it get us through to the end of November 17th into November 18th, averting another government shutdown. But this ultimately just really kicks the can down the road, and I think, as Moody's pointed out, just doesn't really solve that larger issue of what's going to happen with spending more in the long term, especially as we get into 2024, which of course is a presidential election year where we'll continue to see that level of polarization.
Yeah, I just find this so crazy, Jill. I feel like every 3-4 weeks there's, this concern that, again, there's going to be a government shutdown. And actually, full disclosure, I walked in this morning, I said, what, not again? What are the odds, once again, as you laid out, that we just kick it down the road?
Well, Francine, I think that's the whole point that Moody's is making, right? I mean, yeah, I'm glad you brought that up, because I think that at that point in their note, like, it's not a downgrade in the way that we saw Fitch downgrade the U.S.'s credit rating from AAA earlier this year. But what it did point out was that idea of political polarization in the U.S. along with the U.S. fiscal position being a major concern for Moody's. And I think that when you've got these types of measures where you're just creating these stopgap spending bills every few weeks, then that continues to outline that issue of if there's no long-term solution for government spending, how exactly are you supposed to be more confident about the nation's fiscal position? So yes, I think at this point, it's in the name, right? Stopgap spending bill. It's really only a stopgap until we get actually into next year.
Yeah, you could also call it Groundhog Day, starring Bill Murray. Jill, thank you so much. Jill Dice is there for joining us with the very latest on, of course, this government shutdown possibly looming. Let's now take a market angle. Joining us now is Maria Weitmane, Senior Multi-Asset Strategist of State Street. Maria, here we are again. First of all, it's been way too long since I spoke to you last, so thank you so much for coming on the Pulse. But here we are again with a potential government shutdown looming. If actually Moody's downgrades the U.S., does it make a big difference on how you want to play the U.S.?
Good morning. And yeah, we're very pleased to be on the program. I think in general, our market view is quite negative on equities. So shutdown is kind of another step in the problem. And I think, as your previous guest suggested, is that it's very difficult to see like fundamental way out of this problem. And we know that, one thing that kept U.S. stocks fairly resilient this year was fiscal spending. And that is, again, increasingly questioned. So no, I agree. It's very difficult to see a good resolution, long-term resolution. We know that Republican Party is fractured. Democrats don't want to help them, particularly as election year is approaching. So yeah, it is a challenging backdrop, and it's difficult to see equities benefiting from it at all.
So what does that actually mean for markets? We have also great stories saying, Goldman Sachs and Morgan Stanley are definitely diverging on some of the Fed rate cut forecast. I think Morgan Stanley sees a 300 basis point of rate reduction. Where do you stand on when interest rates will be cut?
Yeah, I think we'll probably make situation more confusing. So we strongly believe that recession would be very, very hard to avoid. And the reason for that is that U.S. economy is still quite resilient. So we had a strong GDP print, we have labor market being strong, we have still inflationary pressures in the economy. So the situation is current economic backdrop is fairly resilient. So which means that when we see kind of that makes it kind of a bit inflationary, so that would make it very difficult for Fed to start cutting rates next year when we see kind of economic slowdown. So current strengths makes this higher for longer outlook much more likely, which will create stronger recession and very, very challenging backdrop for equity market.
So, Maria, what does it mean for where you want to be invested? And actually, is there a good entry point?
Yeah, so that's a kind of interesting point for us, is that what we quite stressing with our client discussion is that investors are really positioned for soft landing. We see it in investor holdings, so their average holding, aggregate holdings allocation to equities is still above average. We still see quite big positions in cyclical stocks relative to defensives, which means that this kind of soft landing is really kind of investors' main expectations. We see that in earnings outlook, we see that in economic forecast. we kind of see this market is not expecting deep recession, which to us makes it huge pain trade. So which means that we are likely to see more downside before we see upside. So for now, we're staying out of the market. We prefer cash to other asset classes. We prefer kind of safety of, like within relative positions, we prefer kind of relative safety, so large caps versus small caps. We prefer like quality, like stable earnings, stable dividends. So that type of trades relative to more cyclical. So, but generally staying out of the market.
So, Maria, what does it mean for earnings? Are you actually expecting multiples, the kind of growth that we've seen over the last couple of quarters, especially in Europe, and that the U.S. will be hit, or is there more leg up for U.S. equities?
It really depends on kind of your perspective. So if you are like absolute return investor and you can choose between asset classes, so we'll expect more downside in equities. If you are equity kind of long only investor and you need to allocate within various like equity markets, then we think that US will do better than Europe. I mean, Europe is very cyclical market, depends on global growth. That where we see the biggest challenges, while US, I mean, thankfully has tech sector that we continue to expect perform reasonably well because it's more kind of larger cap stock have better access to capital, they better protect margin, more stable earnings. So that's where potential strength is. Potential relative strengths, I should say. It has lots of defensive stocks as well. So that's an area of relative outperformance. But kind of relatively speaking, US is better than Europe, but all the rest of the world. So Maria, but in absolute terms, it's still very challenging.
So Maria, in terms of energy or groups that you like energy, you like healthcare, you like IT, but actually you're avoiding industrial companies and you're avoiding banks.
Yes, yeah. So that again, that's kind of the view on or the concern about global growth slowdown. So if we are right and this kind of recessionary environment is thus happening, then like financials will struggle, industrials will struggle. We believe that growth stocks will outperform value in that backdrop. So those would be like financials and industrials and probably materials would be the key areas to avoid.
Maria, as always, thank you so much for coming on. Maria Vetmane there, Senior Multi-Asset Strategist of State Street. Now, coming up, the UK Prime Minister, Rishi Sunak, sacks his Home Secretary, Suella Braverman, after a tense weekend of protests in London. More on the fallout in the Conservative Party. That's next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Already 800 gross orders for the year. Yep. The likes of Air India starting the year, Ryanair, Southwest, United adding to the order base. And this year's been more of a pivot to some of the wide body orders. So we saw a strong narrow body order. No doubt the world's on fire in terms of travel's back. Yep. So it's natural this wide body order
Okay, you talk about the world being on fire, so let's talk about that. You've got huge demand at the moment, but you've got huge uncertainty. You've got the geopolitics. We're in this region right now. You've got huge economic headwinds also beginning to gather as well. We've got industrial headwinds. Are you surprised that this industry is sending such a positive message at the moment, given all of those headwinds?
Well, it's a resilient industry, and remember, it's an industry still recovering. So we're not surprised from that context because we're at 97% of 2019 levels, still have bounce back left, and we're still seeing steady signals of growth in the GDP around the globe. So in that context, no, we're not surprised. Are there forces that are potentially destabilizing? Those are out there. We think the resilience of this long-term demand is there, and that's explaining this need for airlines to get ahead and get their order book in place.
What's their pitch? Well, that was Stan Deal, Boeing Commercial Airplanes Chief Executive Officer, speaking to our very own Guy Johnson at the Dubai Air Show a little bit earlier. Now, we're just getting, of course, the opening pre-market share price for Boeing up some 3.3%. You can see at 102.8. And this is, again, as China is buying actually more aircraft after they've frozen them off for a bit of time. The UK Prime Minister, Rishi Sunak, has sacked the Home Secretary, Suella Braverman. Now, opposition parties had accused Braverman of stoking division after accusing the Met Police of playing favourites with protest groups. Over the weekend, police arrested dozens of mainly far-right counter-protesters seeking to disrupt a large pro-Palestinian march in London. Now, the event coincided with the annual Armistice Day. Well, Bloomberg's Adam Blanford joins us with, of course, the very latest. I mean, this is huge news, right? And she had been very controversial in the last couple of years, but certainly in the last couple of months also with tents and homelessness. What does it mean for Rishi Sunak? Is he now going to have someone on the opposite side that will try and challenge him?
He's, thank you. He's got, this is the second time that Suella Braverman has been fired by Rishi Sunak as Home Secretary. The first occasion happened very soon after he took office. Since she's been there for the last year or so, she's been pushing a particularly quite tough line on immigration, and again, as we've seen here, on the protests in recent times. So her brand of conservatism, when she's been railing against what she sees as sort of failures of multiculturalism, she's going to sort of take that into the backbenches, and that's potentially be at odds with what Sunak is pushing in government.
So, Adam, how many Conservative parties are within the Conservative Party? Like, how right-wing actually is the party now?
There's a lot of, you'll see there's a host of policies that Sunak has been espousing recently, from slightly watering down the green measures and net zero to migration to a host of things that have been attempting to kind of recapture some of the votes that Boris Johnson won in 2019, trying to appeal perhaps to their base. Braverman was a core part of that. There's quite a bit of support, but there's not necessarily enough within the Conservative Party in Parliament to trigger anything as dramatic as a leadership election. And of course, it's little more than a year. They've got little more than a year left before they have to call an election.
So, Adam, when we're hearing, of course, of a cabinet reshuffle, you can't just, sack the Home Secretary and keep everyone else as it is. But what's their strategy now to try and win the next election, which will be, given the polls, quite difficult?
Well, Sunak stood up at his party conference not so long ago, and I think even again yesterday in his communications, talking about long-term plans for a brighter future. That's sort of what they're trying to do, what they think they're trying to do. But of course, the messaging is very difficult. They've been the Conservatives in power for 13 years. The Labour Party is equally talking about long-term and a new kind of a new path. The Conservatives are 15 to 20 points behind in the polls and have been there for quite a while. So Sunak is trying to project an air of confidence and competence. Doesn't necessarily fit so well with losing your Home Secretary on a Monday morning.
Adam, thank you so much. Adam Blanford there with the very latest, of course, on this story, and we'll continue watching further government reshuffling and bring you the very latest. Coming up, talks intensify over a potential deal to release hostages held in Gaza. Now, the latest from the Middle East is up next, and this is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Senior officials in Israel and the U.S. have suggested that talks are intensifying around securing the release of Hamas-held hostages. Now, President Biden spoke with Qatar's leader about efforts to secure additional releases, and the Israeli Prime Minister Benjamin Netanyahu hinted that a deal could be in the works.
Is there a potential deal?
There could be, but I think the less I say about it, the more I'll increase the chances that it materializes. And it's a result of pressure, military pressure.
Meanwhile, the Saudi Crown Prince Mohammed bin Salman condemned Israel's actions at a summit in Riyadh over the weekend.
We are in front of a humanitarian disaster that is witnessing the failure of the UN Security Council and the international community to put an end to Israel's brutal violations of international law and humanitarian international law.
Now let's get more with Bloomberg's EMEA News Director, Rosalind Matheson. Ros, thank you so much for joining us. So what do we actually know about these extra efforts to secure the release of the hostages?
Well, we do know, as you were saying, that the US President Joe Biden spoke with the Emir of Qatar on the weekend. And Qatar's had a very special role in this. They've been seen as a good faith actor on either side, so they're able to negotiate between Hamas, Israel, and others. And it's not the first time Qatar has done that, so they've got an increasing track record of being able to do it. That said, the talks are exceptionally delicate and very cautious, and we're not yet seeing signs that a deal is near. Of course, for Israel, it might mean having to release Hamas prisoners back into Gaza, which is something the Israeli Prime Minister does definitely not want to do. And equally, you know, at the same time, Hamas doesn't seem to want to relinquish Israeli citizens back into Israel. So little signs of progress going forward, but no sign of a deal actually eventuating yet.
And then at the same time, so we had Arab leaders actually meeting over the weekend. Did they have a united message? Emmanuel Macron came out, and I think the first world leader in G7 asking for a ceasefire.
Well, certainly expressions of concern, but this is not a homogenous group. This is a big group of states, some of whom includes Iran for a start, and some countries that are very close to Iran, and other countries that are increasingly trying to build their relationship with the West. I mean, UAE and Israel for a start, Saudi and the US for a start. These are countries that are trying to build economic investment ties with the US, Israel, and others. And so there's a whole range of countries in that. And of course, Iran backs militants who are operating in Lebanon at the moment, Hezbollah against Israel, Hamas itself in Yemen also. So there's no great unified view here. They've all got their own interests of what they want in this outcome. So nothing beyond sort of bland general statements from that meeting.
Roz, at the same time, so the U.S. has struck this Iran-linked facility in eastern Syria. What more do we know?
Well, we know they hit a training camp in Syria. They've been doing that more and more in recent days. That's because there's been an escalation in attacks on US troops in Syria and Iraq since this war broke out. More than 40 attacks now that we know of, and a number of casualties in that. And alongside the increase in the attacks by Hezbollah in Lebanon into Israel, it just raises the risk again. The US gets drawn militarily into this conflict. You can see the level of concern now from the Americans about that being a possibility. Warnings now starting to creep into Israel. Could you perhaps slow it down a bit? Because we're really worried here that Iran's going to get pulled in. If Iran gets pulled in, the US gets pulled in, and then you've got a much bigger regional conflict as a result.
But Ross, also we're looking at these horrific pictures from Gaza. Is Israel getting a lot less support?
Certainly, you can see that some of the narrative globally has turned on that. Still, obviously, support for Israel in the aftermath of the Hamas attack on October 7, a terrible attack on Israel, but also increasing concern about the humanitarian situation inside Gaza. We know that the hospitals there are barely functioning. We know that there are people packed into those compounds. We know they're struggling for fuel, for medicine, and so on, and really sort of calling on Israel to sort of slow down the assault as a result.
Ross, thank you so much. For the very latest, Ross Matheson, there, our EMEA News Director. Now, coming up, we look at the private equity space with the Carlyle Group co-founder and co-chairman David Rubenstein. We'll talk valuations. We'll also touch, of course, on a possible U.S. downgrade and what that means for business valuations. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
The UK Prime Minister Rishi Sunak fires his Home Secretary Suella Braverman after she defied his authority over the handling of the pro-Palestinian march. Moody's threatens to remove America's last remaining AAA debt rating, citing political polarization as a risk of a U.S. government shutdown looms again. Plus, China is said to be weighing an end to its freeze on Boeing purchases ahead of Wednesday's meeting between Presidents Biden and Xi. We'll, of course, bring you the very latest on the summit. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. A lot going on for a Monday morning. Now, private capital funds managed by the biggest firms continue to highlight alternative asset outperformance versus public assets over the cycle. Last year, PE gains topped those of other types of holdings amid moderating absolute returns for the broader market. However, Bloomberg Intelligence cautions that a tighter economic backdrop could pressure borrowers' capacity to repay debt. Well, here with us to discuss all of this, co-founder and co-chairman of the Carlyle Group, David Rubenstein. He also, of course, is a host of Bloomberg Wealth and the David Rubenstein Show. Thank you, David, for joining us.
Thank you for having me.
A lot going on in the private equity. Then when you look at the cost of credit and cost of money, how much of it is it a barrier for private equity?
Well, private equity is not doing as many deals as it did a few years ago. The cost of capital is higher, obviously, but it's not the biggest problem. The biggest problem is that buyers have bought things over the last couple of years thinking that they would sell them at certain multiples of return. And then sellers, sellers now, they turn out to be sellers, the buyers that were the buyers, they bought these things, now they want to sell them. When they sell them, they want to get a certain rate of return, but they're not likely to get that because the new buyers are saying we can't pay that much because the economy is slowing down and interest rates are higher. And so there's also a fear that you could go into a recession in the United States, and if so, nobody wants to buy into a recession. So I'd say the sellers are here, the buyers are here. There's a gap of 15% or so between the bid and ask, and that's why deals are not getting done right now.
So, David, what happens? Who's going to budge first, right? At some point, these two mismatches will have to come together.
Yes, the economy always works out in some way that there's a compromise between the two. But I would say right now people are waiting to see whether the Fed is going to increase interest rates again. And if they do not, whether they're going to begin to cut. And if they do, then I think people will feel a little bit more emboldened. One of the issues we have in the United States is there going to be a recession or not? Right now, I think the consensus is that there will not be a recession. But, you know, those consensus change from time to time. So I don't know.
Yeah, and we're looking at, are you feeling actually any stress out there in the U.S.? We're looking at lending. I mean, there are these pockets actually of concern in the U.S. economy.
There's always pockets of concern. Right now, we're probably going to grow this year at 1.7%. So it's not recession-like numbers, but it's not 2 or 3%. I think the U.S. economy is still trying to figure out what the Fed is going to do. Is the Fed going to cut or not, and when is the Fed going to cut? And one of the issues that hasn't been talked about very much is the Fed probably is going to find it difficult to cut next year before the election. Because if the Fed were to cut interest rates before the election, obviously it'll be accused of helping
the Democrats, and that would be very unpopular with the Republicans. So I suspect the Fed, to avoid political criticism, will probably wait to do any cutting until after the election.
Yeah, but at the same time, if we have inflation at 4% and it gets stuck at 4%, it could be very painful for them to get inflation from 4 to 2%.
Well, getting from 4 to 2 is not easy. It's easier to go from 8 to 4 than 4 to 2. 2 is what we had for 25 years, but it's not likely we're going to get down there so quickly. So the Fed has been very consistent in saying we got to get to 2%. They have said a couple times, well, 2% within range of 2% or close to 2%. So it may not have to actually hit 2% before they actually begin to cut. But it can't be 3 or 4%. They made it clear they didn't want to go to 2%.
David, where do you see deals in private equity? Again, the private equity space is changing, also because of the lack of companies to buy. So you have a lot of money chasing the same assets.
Well, there are always going to be deals. People are always going to do some deals. There are deals that are going to be done in technology, for sure. That's a very hot area. A lot of opportunity is now available in, let's say, fintech and financial services. Athletics, sports-related thing is also seeing a lot of activity. So I think there'll be activity. I just think the prices that the buyers are going to pay is lower than what the sellers really want. Now, that gap is about 15%, and it'll probably close, but not for a while.
And that's across the board in the U.S., in Europe, or valuations in Europe have always been a bit cheaper. So I wonder whether it's easier to do.
Well, there's still a gap here. I think here, there's some countries in Europe are in recession, in effect. And so I think many people are more nervous about it than before. But I do think there is equity available, and there is debt available for deals when the pricing gets closer to where people on both sides want to do it. I think their fundraising is more complicated now. Fundraising for new private equity funds is more challenging than it was a couple years ago, because of the called the denominator problem. Groups that have money have less to give out because their overall corpus has shrunk a bit. But there's still money there. People find good deals at a good price. There'll be money available.
Are you surprised that there haven't been more defaults in companies when you bring interest rates from 0% to 5%, that nothing really has been broken?
Well, there haven't been as many defaults as you might have expected, though I do expect you'll see more defaults in the real estate area and commercial real estate. Commercial real estate has changed dramatically in Europe and United States, in part because office buildings that were used to be full are not full anymore because people work at home, so the tenants don't really need as much space. In addition, interest rates have gone up. That means the value of the building has probably gone down. So if there are going to be defaults, there are probably going to be defaults in commercial office real estate in major cities. I think that will probably be the biggest area you'll see defaults. But also remember, a lot of the loans that were done years ago are so-called covenant light, which means that it's harder to default for a while and you get a lot of leeway.
But should we worry about shadow banking more? I mean, commercial real estate is the one thing that's been telegraphed so much that I wonder whether there's going to be other pockets of the economy in distress.
Well, shadow banking, by that, what you mean is people are lending money who are not regulated by the regulators, typically. Yeah. And as you all know, private equity firms have grown large private credit businesses. So the largest private equity firms operate gigantic private credit businesses, which are not regulated in the traditional sense that banks are regulated. Right now, I think the government isn't doing anything to deal with that because there hasn't been a problem. Right. And I don't think there will be a problem. I think that the credit standards are pretty good, but there's always some challenge when the economy goes down. But right now, there doesn't seem to be defaults there, and the private credit business is doing pretty well. And that's the highest area of growth for the large private equity firms.
What's your take on China right now? How should we view China from a private equity perspective?
I was in China just a few days ago, and everybody's excited about the meeting between Xi Jinping and President Biden in a couple days. I suspect that there is going to be some kind of thawing in the relationship. I think both sides recognize that it kind of got off track a little bit. I think the Chinese, I can't speak for the Chinese or the Americans, but I think both of them feel that there's a better opportunity now to come together, and I think they feel it's in everybody's best interest to do so. So I do think you'll see some progress there in San Francisco.
But again, as you see the trade relationship between the U.S. and China becoming, I don't know whether it is more fraught now or whether you're expecting a bit of, a rapprochement with President Xi and Biden meeting this week.
Well, it's not, summit meetings don't usually come up with solutions overnight, so it's a process. But there is still a large trade deficit the U.S. has with China, and that's not going to go away anytime soon. I do think that that decoupling, so-called, is not realistic. I think globalization is here to stay, and you just can't decouple. Our economies are too interconnected. So I think that's a phrase that probably isn't appropriate. I do think the Chinese government, again, I can't speak for them, but my sense from being in China is the Chinese government would like to have a closer relationship with the U.S. government, and the U.S. government, in my view, would be they'd like to have a closer relationship with Chinese government, and there'll be some modest progress, my guess is, in San Francisco.
But so when these two superpowerhouses are, if they don't come closer, does it mean that there's going to be more opportunities in other Asian countries for capital flowing?
Well, there's obviously some capital is moving out of China into other Southeast Asian countries and India as well. There is not a lot of feeling in the United States you should brag about doing investments in China. Right now, there's some concern that if you're too visible doing things in China, it might not be that helpful. But I do think that it's unrealistic to find the same ability to manufacture things in China as you can find in Vietnam or in other Southeast Asian countries. So there is some movement out of China, but not so much so that it's going to dramatically affect the Chinese economy.
But politically, is it very difficult for the Democrats to reach a deal with China on an election year?
I think there's one consensus in Washington. It is that beating up on China doesn't have a political consequence. So for Republicans and Democrats, beating up on China generally they think is politically okay. But that doesn't mean that you can't make a better relationship without suffering politically. So I think President Biden thinks it's better to get something done rather than nothing.
You are a great student of American history. You're very involved in trying to understand the Constitution and actually what's going on in America. As a foreigner, you kind of look at the elections and you know, there's a lot of surprising things. What do you find most surprising as an American?
I find it surprising that basically after 4 years, we're likely to have the same two people we had 4 years ago. And clearly it's going to be a very close election again. I think many Americans are surprised that President Trump seems to be the nominee likely for the Republican Party, and many Americans are surprised that Joe Biden wants to have another term, but they both clearly are likely to be the nominees, and it's going to be a very close election either way.
Okay, and we'll see what that means for business. David, stick around. David Rubenstein, they're co-founder and co-chairman of the Carlyle Group, stays with us. Plenty more ahead, and this is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now we have two pieces of big breaking news. First of all, Emirates says they've just received an order with Boeing valued at $52 billion. Now we're also expecting some kind of deal possibly with China, because they had frozen Boeing out for quite some time, and in the last couple of days at the Dubai Air Show saying that they will no longer actually freeze them out. So Boeing was also rising pre-market as China said they were weighing this ending of the freezing. Now with that $52 billion extra order, Boeing up 3.5% in pre-market. The other big story is, of course, a government reshuffle here in the UK. James Cleverly, who was, I guess until moments ago, the Foreign Secretary, has been named Secretary of State for the Home Department. So he replaces Suella Braverman. There's also an absolutely brilliant opinion piece that just crossed the Bloomberg terminal where basically Martin Ivins says, look, that if you look at the populist UK Home Secretary responsible for law and order, her main downfall was that she didn't have enough nuance. What that means longer term, whether she still will remain the darling of the Conservatives Party right wing and therefore have something challenging or have a leadership contest with Rishi Sunak, remains to be seen. So we're expecting more cabinet reshuffle, including we need a new Foreign Secretary of the UK. As soon as that's announced, we'll bring you the very latest. Now, still with us to talk politics, to talk business, co-founder and co-chairman of the Carlyle Group, David Rubenstein. David, thank you so much for sticking around. We were talking a little bit about the U.S. and China. I was also asking you what you found most surprising in U.S. politics. When you look at the government shutdown, I mean, it's unbelievable that we're here where we were a couple of weeks ago, that we can't really get our act in order in the U.S. to find a long-term viable solutions. I mean, what does it mean for businesses?
Well, bipartisanship is out the window. When I worked on Capitol Hill and in the White House, bipartisanship was thought to be a good thing, and Democrats who worked with Republicans were thought to be good legislators, and Republicans who worked with Democrats were thought to be good legislators. Now, if you work with people from the opposite party, you're thought to be almost a traitor. And so it's unfortunate that we've gotten to this mode. I do think we have a problem coming up soon, November 17th. The U.S. government runs out of money again, so there has to be some solution to that. But I think the international markets are probably getting tired, as the people in the United States, of this perils of Pauline. Every couple of weeks, we can't seem to fund the government, let alone deal with the debt issue. That's a separate problem we've dealt with, at least for the next election. But I do think we have a problem in getting the U.S. government to be funded. And I think there's a solution that's being considered now, but there'll always be some political challenges to it. And waiting until the last minute to get a solution is never a great thing.
But is this because of divisions? And actually, we're seeing divisions almost across the board in every major economy.
Because the country is split down the middle. Basically, Congress has basically as many Democrats as Republicans almost. So when you're split down the middle, it's hard for one side to say we're going to go to the far right or one side to say that we're going to the far left. And you have to compromise. And if you get into politics and you don't compromise, you don't get very much done. So right now, there's a feeling that compromising is a sign of weakness. But actually, it's a sign of strength, in my view. And I think it'd be a good idea if people would work together. But it's not working that way right now.
Is it difficult to do business in the U.S. because of these divisions? I'm also thinking of ESG and some of the climate deniers.
Well, if a company was run the same way as the U.S. Congress was run, it probably wouldn't be getting a lot of shareholders. You can't run a company or a government where you're going through a perils of Pauline every couple of weeks. It just doesn't give people a confidence that you know what you're doing. So members of Congress are all well-intentioned. I know many of them. They work very hard, but they raise their money from the far left and from the far right. And therefore, you tend to have people very much diametrically opposite. You don't raise money down the center saying, I want to do something that's good for the country right down the middle. That's what I'm going to do. That doesn't raise any money. You raise money from the far left and the far right, and members reflect that.
David, it's always quite thrilling, actually, for a foreigner to follow the U.S. election cycle in the year. What happens to businesses if President Trump gets elected?
Well, predicting a year in advance who's going to be president of the United States is a fool's errand generally. If you go back the last 10 presidential elections and say who's going to be president a year in advance, you'd be wrong almost every time. President Trump had an economy that grew when he was president. It probably grew at about 1.5% a year on average. President Biden has had to grow 2.6% in the first 2 years, but that reflects the coming out of the COVID situation, and it's probably going to grow 1.7% this year. Usually, when you look at statistics, it turns out that the economy grows the best in the U.S. when the government is divided. In other words, divided between the Congress and divided between the president. So it's hard to say, tell me who the Congress is going to be, and who the president is going to be. I can tell you where the economy is likely to be. But in the end, right now, the U.S. economy's biggest concern, I think, and biggest challenge is making certain that we avoid the recession that could come about if interest rates are tightened a bit more. Right now, we've avoided the recession, and hopefully we can continue to do so.
But President Biden has actually done quite a lot in terms of legislation and pushing things through. It's not reflected in the polls. He's not getting credit for it. Why?
I wish I knew. I don't know. He has used the phrase Bidenomics. It doesn't seem to be a phrase that's catching on and giving him a lot of popular support. But he's done a pretty good job of getting the core of his legislation through. And in fact, virtually almost everything he wanted, he got through. Maybe not in the same size he wanted, but he got a lot done. But, you know, very often in politics, you don't get credit for things. I worked in the White House for Jimmy Carter, and we got more legislation done than anybody ever had done in 4 years, but he got virtually no credit for it. So, you know, life isn't fair and politics isn't fair.
David, when you look at the economy or the markets, they seem to be ignoring a lot of geopolitics. Is this because they don't know how to price it or because they're discounting it?
Well, the geopolitics of what's going on around the world right now?
Yeah, China, U.S., right. Israel, Gaza.
Nobody really knows what's going to happen in Israel, Gaza, or what's going to happen in Russia and Ukraine, what's going to happen in China, Taiwan. No one knows for certain. So you have to factor in some uncertainty factors. I think all investors now have geopolitical experts trying to tell them, here's what's likely to happen, and here's how you can take account of it in your investments. But in the end, you're making a guess, and nobody really knows. I think having a lot of wars go on at the same time, or potential wars, gives people uncertainty. What business people want is certainty and predictability, and right now there's a lot of uncertainty and a lack of predictability.
And you said you don't believe in decoupling between China and the U.S. Do you believe in deglobalization, that actually there's going to be more inward-looking from the major economies?
Deglobalization is a nice phrase, but it's unrealistic. At this point, economies are so interconnected, it's not realistic any longer to talk about globalization being going away. It's just not realistic, in my view. You might be able to modestly make some changes, but right now the United States is buying roughly $500 billion more or less of products and services from China, and we're selling roughly 150 to 170 billion, and that's not going to change very much over the next year or two, in my view.
David, thank you so much for coming on. The co-founder there and co-chairman of the Carlyle Group, David Rubenstein. I have some very, very big news for you, actually, and this is according to The Sun. The Sun, who I have to say is always, usually, very well informed. We don't have confirmation, but it is well informed on UK politics, and they have said that David Cameron, the former Prime Minister of the UK, who then stepped down after Brexit, is expected to be named Foreign Secretary. Now, we did have from a reliable source that just moments ago he had been seen going into number 10. This is the very latest from The Sun saying David Cameron expected to be named Foreign Secretary. And this is after the current Foreign Secretary, James Cleverly, stepped in or will step in as Home Secretary after the firing of Suella Braverman. So we'll have plenty more on UK politics. Also coming up, military talks and economic ties are amongst the priorities for U.S. Presidents Joe Biden and China's Xi Jinping when they meet in San Francisco this week. We'll be discussing that next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now, President Joe Biden and Chinese President Xi Jinping are expected to meet on Wednesday on the sidelines of the APEC summit in San Francisco. Now, the gathering will be the first face-to-face conversation in a year between leaders of the world's two largest economies. For more, let's get straight to Bloomberg's Rebecca Chung-Wilkins. Rebecca, thank you for joining us. So what are the conversations that they're likely to have that will be going on between the two world leaders?
Well, the two sort of central issues and what has made the relationship so fraught really is one, economic curbs, which we know they've anticipated conversation on with these meetings between Janet Yellen and counterpart He Feng leading up to this meeting between Biden and Xi. And the other is Taiwan, another sort of thorny flashpoint that has remained a sticking point. Now, I think it's unlikely we see any major concessions on either side of those issues, but you know, the inconvenient truth is both Biden and Xi do, unfortunately, really need one another at this moment. They're both grappling with these domestic challenges at home. And so I think, you know, there is some expectation that we might see them walking away with a little bit more, something a little bit more concrete, be it on AI, climate change, or maybe even fentanyl, but something where neither side will need to make a big concession in order to still have something of a win that goes beyond just continuing to talk more.
Rebecca, you also wrote in today's Bloomberg Big Take piece on Biden's and Xi's relationship. Do you think this is the start of a more amicable way forward?
I think certainly there seems to be a concerted effort on both sides to try and open up those channels of communication. And the military element is really critical here. I mean, a lot of that was essentially frozen after Nancy Pelosi visited Taiwan last year, with Xi Jinping reportedly refusing to take calls from the White House until relatively recently. And when we look at, for example, these recent clashes between the Philippines and China in the South China Sea, it's essential that these military lines of channels of communication do remain open.
Rebecca, thank you so much. Rebecca Chung-Wilkins there in Hong Kong. Now, you can read Rebecca's Big Take article on your Bloomberg terminal. Also, the other story of the hour, of the day, probably of the week, is that, according to The Sun, the former UK Prime Minister, David Cameron, is expected to be named Foreign Secretary. Now, this is according to The Sun newspapers. We do not have it confirmed, but usually, I have to say, they're pretty plugged in when it comes to UK politics. And this is after the UK Prime Minister, Rishi Sunak, named James Cleverly as Home Secretary to replace Suella Braverman as Home Secretary. So this is official, and that's according to Downing Street. We'll see what happens next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The threat of U.S. government shutdown looms again as Moody's lowers the country's outlook, citing political polarization. Goldman Sachs and Morgan Stanley diverge on their bets for a Fed rate cut. Investors now await key inflation data due tomorrow. And Boeing versus Airbus, the two rivals are readying major orders in Dubai. We're live to the air show. A very good morning to you. Take your mind back, 2018, the longest shutdown at 35 days. That's what the market is grappling with, along with Moody's talking about the angst of politics and the fiscal largesse of the United States of America. 10-year yields drop ever so slightly this morning. Do you want to be long treasuries in the event of a shutdown, in the event of an actual downgrade? There is downside risk on the U.S. fiscal strength. It's no longer being fully offset by the sovereign's unique credit strengths. For the moment, no huge impact. CPI Tuesday, there's fear and loathing. The risk is the CPI comes in at 0.3%. That is the third month in a row of that snapping 6 months, that 6 month stretch of slowing price growth. Powell, of course, did tell us he will not hesitate to tighten again. There's a big divergence. Morgan Stanley, 300 basis points cut kicking off in June of 2024 next year. And Goldman Sachs say they're closer to the Fed. They're hugging the Fed. So with all of that in mind, we look at dollar yen. You are just inches away from a 33-year low on dollar yen. So what we're looking at there is the hedge funds. They're the longest of the dollar since 2022. Your level on that is 151.95. That is 20 pips away. The oil market is down ever so slightly this morning. You are just seeing, again, a drop of over 12% in the past 3 weeks on the oil market. And you've Goldman Sachs cutting their Brent outlook by $6 to $92. Danny, good morning.
Good morning, Manus. Let's be honest, it's kind of a quiet calendar. We've got no auctions this week. So your risk event is tomorrow at 8:30 a.m. Eastern. It is the CPI. We'll get retail sales after that. The next day we'll have some Fed speak, but it is about CPI. U.S. futures and NASDAQ, both S&P, are down this morning 0.2 and 1/3% this morning. But Manus, they've been on a tear. U.S. stocks have been higher for 9 out of the past 10 sessions. European indices, those move higher this morning, up 0.7%. But Morgan Stanley says that you want to bet on the U.S. The growth will be stronger. It is a high bar for the rest of the world to meet. So you do have the scenario where we're pricing in more of a soft landing. But will the data back that up, Manus? We did get UMich numbers on Friday, and the soft data for its part does not necessarily back up the idea of a soft landing. You have consumer expectations of inflation surging. Let me get to the chart for you, Manus. Because in part of the higher oil prices, they're facing some of the war risk premium. But there you go. It jumped, and now we're at a point where, again, inflation expectations, Manus, are at the highest in a decade.
Well, this is everything that Jay Powell will not hesitate to react on. I wouldn't exactly call that. I mean, the debate is this, is whether we're becoming slightly unmoored rather than anchored in the inflation expectations. And that is going to be part of the debate. I mean, look at that divergence between Morgan Stanley at 300 basis points of a cut. I mean, something's bad has got to happen to get you there, Danny. But let's circle back to the risk of a shutdown in the United States of America. We're inching ever closer to a government shutdown in the coming 5 days amid Moody's threat of a potential credit downgrade. This despite the House Speaker, Mike Johnson's compromise plan with officials from both parties hoping to avoid it.
The Republicans in the House of Representatives and the Speaker of the House are just out there playing political theater. And if they keep this up, they're going to shut down the federal government.
Really, this should start in the House. So let's see what they... I'm willing to let them go first and see what they come up with. And if it's a good faith approach, and say, let's do that, and let's finish our appropriations bills.
If the House sends us an irresponsible CR, then the risk of a government shutdown is pretty great. So it's really in the hands of Speaker Johnson and the House.
Negotiations are ongoing right now, as I understand it. Very few members of Congress, House or Senate, want to shut the government down. So minds tend to be focused in the 11th hour.
Another month, another episode of DC shutdown drama. Joining us now is Peter Kinsella, Global Head of FX and Precious Metal Strategy at Union Bancaire Privé. Peter, I'm sorry we have to go through this whole song and dance again.
Aren't we all?
It's happened again. It's also met with that Moody's downgrading their outlook. At what point does it actually matter for the dollar, especially? At some point, will we say the shutdown drama and the fiscal episode in the U.S. is going to mean the peak of the dollar is in?
Yeah, I think really it depends. If we do get a shutdown, it will be the length of the shutdown, right? Because that basically means a contraction in growth, and consequently that we may begin to price in an earlier sort of Fed rate cutting cycle. So it's really the length of any potential government shutdown is the issue. As I remember in 2018, we were shut down for roughly 35 days at the time. And then that obviously brought forward expectations of the Fed and then a slightly weaker dollar. So that's kind of where we are this time around. I do find it interesting that Moody's, which has always been the laggard of the rating agency, is now kind of getting out ahead in front of the pack, trying to call for another downgrade. It is justified, however. We do see political dysfunction, very, I would say, curious, to put it politely, fiscal debt metrics.
Very diplomatic.
Yeah, one has to be these days. And so really, you know, I kind of make the analogy, it's not the debt ceiling, it's a debt, right? We're getting to a situation where, you know, U.S. debt dynamics are being questioned, and that inevitably will put pressure on the dollar, but not for some time yet, I fear.
So where does the pinch point come? Peter, good morning, excuse the alliteration. Because next year is not going to be a year of sobriety and probity, is it? It's an election year. Biden's not going to pull back. They're going to have to print more bonds to pay the interest. So where is the pinch point? How does the market test the fiscal largesse?
Well, we'll have to see what's happening with other currencies for a start, and what's happening with other central banks, particularly those that appear to be relatively more solid and you know, more creditworthy. You know, you're quite right. Next year is going to be pretty tricky. You know, governments tend to spend an awful lot of money during election years. And we then have the prospect of Donald Trump being re-elected as president, and you know, he's not going to talk about fiscal probity during his election campaign. No. If anything, we're likely to see you know, further talk about tax cuts and stimulus, etc. So you know, we're in a situation where for at least the next 12 to 18 months, I think we're, you know, any hope of fiscal probity and prudence is really being thrown out the window, I'm afraid.
Manus, I was just thinking you had a good stat today on hedge funds. I don't want to steal it, but to be honest, I actually just can't remember it. What was it? Hedge funds long since
she actually designed this chart, to be fair. It's 992. This is how long the market is of dollars.
Yeah.
The longest since 2022. The longest since late 2022. That was the stat you were actually looking for.
Thank you. Thank you, Manus. See, Peter, he saves me every day. This is what Manus does for me. You do have positioning racking up for the dollar. Here you go. There's that chart for hedge funds. At what point do you say it's positioning that's going to move things? Are we long enough that could be the factor?
I would say we're not long enough yet. I had a look at the aggregated IMM data recently, and I think the net long was about $8 billion, which, while long, it's not that long compared to previous instances. And the second point is, well, what's the catalyst for, you know, a material weakening in the dollar? Will we see it from CPI? It's unlikely, I would say, at this point, just given that we're looking at the month-on-month print, roughly 0.3% month-on-month. That's going to keep Mr. Powell and company, you know, pretty elevated vis-a-vis the potential for a last or final rate hike. Personally, we think they're done as far as rate hiking is concerned. But really, were we to see a substantial weakening in CPI, that's in your catalyst for potential weakening.
So what does that mean for dollar yen? They'd breathe a sigh of relief at the Bank of Japan if that was the case, wouldn't they? They go, we got away with that. I mean, we're looking at a 33-year. Yeah. Where were you what was number one in 1990? At this time when we were really there, I looked it up. Mariah Carey was number one in 1990. I was in my first job at NatWest Stockbrokers, so we haven't seen dollar yen since then. How relieved will the Bank of Japan be if things roll over in the dollar, Peter?
I think they'd be happier to see a rolling over in the dollar than to have to listen to Mariah Carey again coming into Christmas period.
Nothing's wrong with Mariah. Oh, come on. In this Mariah Carey season, you're going to disparage her?
I know. She's defrosting.
I have it on good authority. Kinsella's been seen at a beach club dancing to other trashy pop tunes around the world.
I'm sure that's a total lie. Vis-a-vis the BOJ, look, I think there's two things. The first is that if we look at what they did 2 weeks ago, they've removed yield curve control, but effectively they still have a negative deposit rate. They've got ongoing QE in one form or another, and so hence you've seen the yen weakening somewhat. We're getting closer to intervention territory, 152, 153, and so really I think that there's a pretty poor risk reward from being long dollar yen from current levels. It wouldn't be compelling for me at these certainly at these levels.
All right, Peter, I'm afraid we're going to have to end it there. Honestly, I fear for you this Christmas season if you tire of Mariah Carey. Peter, thanks so much for joining us. Peter Kinsella there of Union Banker Privé. All right, Manus, let's get to the top stories that are trending on the terminal this morning. Republican Senator Tim Scott drops out. The South Carolina senator announced that he is ending his presidential campaign, saying he would immediately make an endorsement. Scott drew interest of prominent Wall Street executives, but failed to stand out in the race.
Iceland is bracing for its most devastating volcanic eruption in 50 years, with a small fishing village at risk of being destroyed. When a different volcano erupted in 2010, 100,000 flights were cancelled, affecting more than 10 million people.
Australia's shipping operations are resuming after cyber attacks paralyzed 4 big ports since Friday, leaving tens of thousands of containers stranded. Port operator DP World says services won't return to a normal for another week. The disruptions at Sydney, Melbourne, Brisbane, and Fremantle comes amid a workers' strike. Manus.
And breaking news, all government changes for Rishi Sunak. Suella Braverman is gone, but also Sunak names the former UK Prime Minister, making a comeback to the front bench as David Cameron as Foreign Secretary for the United Kingdom. Cameron replaces James Cleverly, who has been appointed Home Secretary, and the Chancellor of the Exchequer, Jeremy Hunt, will remain in his position. Tough decisions by Rishi Sunak over the weekend. Coming up, more decisions in politics. President Biden's heading to the APEC summit in San Francisco. Danny, later this week, has sit down with President Xi for the first time in more than a year. More on the story ahead.
But first up next, we're live to the Dubai Air Show. Boeing strikes a major deal. We'll get the latest on the ground in Dubai next on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Cranny is in New York. The Dubai Air Show takes flight today with some major deals, along with more established names at this year's air show. One is attempting a new airline. Attempting to disrupt the market. Riyadh Air, launched by Saudi Arabia's Public Investment Fund, is in the process of building a fleet from scratch. Bloomberg's Guy Johnson spoke with Riyadh Air CEO Tony Douglas ahead of the launch.
So we're very much on track, and the reason why we're here at the Dubai Air Show today is to reveal our second livery. It's already gone viral on the internet, and behind me is our first livery that we released earlier this year at the Paris Air Show. But also, just behind me, our first ever EV car partnership with Lucid, so all about sustainability as well. But in terms of the market, there's always challenges in aviation, but Riyadh, obviously capital city of the Kingdom of Saudi Arabia, fastest growing economy in the world at the moment, and quite frankly, Guy, it needs better connectivity.
Okay, so let's talk about how this is going to work. You've already ordered some aeroplanes from Boeing. We understand you're about to order some more narrow bodies from Boeing, but they're going to take a while to arrive. So you're going to have to launch, you're going to have to lease. When I talk to the lessors at the moment, they tell me that rates are going through the roof at the moment. Aeroplanes, if you can get them, are very expensive. How's that affecting the business model?
Well, you've made a few assumptions in your question there, and perhaps not all of them are the assumptions we're working to. First of all, we will probably not be leasing any aircraft. We will commit to a big fleet, 72 787s already on order. What you are right about is in a number of weeks' time, we will announce a sizable order for narrow-body aircraft. What we'll then have is a fleet that will allow us to connect to over 110 cities by 2030.
You are relying on Boeing delivering. How certain are you that that's going to happen? All of the major OEMs at the moment are having some significant difficulties. Again, does the business model hold together if you don't get the aircraft you need?
Well, I'm relying on Boeing for the 787s delivery. That's the only order that I've publicly announced at this stage. But what we've made quite clear to Boeing is we're special. And what does that mean? It's not that we're special in terms of personalities. We're a startup. Because we're a startup, the biggest one in over 30 years in this part of the world, we don't have a plan B. So if any OEM, doesn't matter whether they're an airframer or anybody else, can't deliver on their commitments to us, it's not as if we can extend leases with aircraft, because we currently don't have any of them as a startup. So we've made it quite clear that that is a fundamental characteristic of how we're contracting with them. But the important thing is this: everybody wants to be a part of this story right now for the reason that I've already mentioned. It's the biggest startup within the last 30 years.
The Riyadh Air CEO, Tony Douglas there, speaking with Bloomberg's Guy Johnson on the ground at the Air Show. Guy, good to see you this morning. I mean, it's order after order after order. Great conversations, and Tony Douglas lays out the big risk if they don't deliver for him. China also said to be ending a long commercial freeze on critical overseas markets for Boeing, and you caught up with the Boeing Commercial Airlines CEO, Stan Deal. So what did he have to say?
Well, okay, let's talk about what Stan Deal had to say. Stan's having a very busy morning, and he's going to have a very busy week. He's here at the air show today. He's then going to get on a plane. He's going to go to San Francisco for the APEC meeting. He wants to be there for that summit between Xi and Biden, President Xi and President Biden, because the relationship between Boeing and China has been strained. It was strained after the MAX crashes. Politics has also extended that strain, and there is hope now amongst Boeing officials that we could be seeing an easing of that strain. So this is what Stan Deal had to say to me earlier on this morning about recovering that relationship with China.
Anytime there's dialogue, direct dialogue, that's a good thing. But, you know, we've been in China for 50 years now. We've been with our customers. Interestingly, last week, the 95th airplane, the MAX that was on the ground, came back. So they have all 95 airplanes flying. We're in the middle of preparing deliveries for the new MAXes. And I'm optimistic about the discussions.
Stan Deal talking to me a little bit earlier on. We're in the midst of the flying display now here in Dubai. So if you see jets rocketing over my shoulder and hear the noise, that's what's going on. So Stan Deal there talking about the China deal, the China relationship and the potential for deals. And we do wonder whether or not we are going to see further deals later this week announced by China. Here in Dubai, we've just seen a $52 billion deal announced by Emirates for Boeing 777s. It's a huge order. Guys, back to you.
Yeah. A huge order, Guy. As you say, $52 billion. What else are some of the deals that have stood out to you in day one?
So that's probably going to be one of the biggest, Danny. But we could be seeing over $100 billion worth of deals placed on day one. That would make this the biggest air show in 10 years. We are waiting to see whether or not we get some big Airbus deals. We are anticipating, and we saw news over the weekend about this, a huge deal coming from Turkish Airlines. Now, that is Turkey mounting a huge challenge to Emirates, to the Gulf carriers. With the kind of capacity that they are talking about ordering from Airbus, they would become a much bigger challenger to Emirates. So it's game on from the Turkish point of view. They want to expand Turkey as one of the regional hubs, and we're potentially going to see that order a little bit later on today.
And of course,
hey, Manus, you see Guy standing out there in the sun. Do you remember what that's like to be in the Dubai sun?
I remember what that's like, but I just want everybody to know I've now got photographic evidence, which will go on Instagram a little bit later on. He thinks he's in a movie, doesn't he? Look at the quiff of her. I haven't seen him smile like that. I haven't seen Guy. Yeah.
There we go. There we go. There's movie star Guy Johnson.
We got him to do it live on air. Just hold that on there, Guy. What do we see? Just get a wee bit. There you go. Live on air. Johnson with the sunglasses. That is a breach.
Live Instagramming.
That is a fundamental breach of Bloomberg style. And I'm going to report you. Guy Johnson.
Oh, goodness, Guy. Thank you very much. We're going to have much more.
I've got a tie on. I'm going to wear the sunglasses.
You're looking cool. Looking smooth.
Yeah. Might as well. We'll try to grab some sunglasses and join you next time, too, Guy. We're going to have more from him throughout the day. He's going to have interviews with Emirates CEO Tim Clark and Airbus Chief Commercial Officer and Head of Airbus International, Guy Johnson, the movie star, live in Dubai on Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's Bloomberg Brief, your Monday edition, get you up and running. I'm in New York. I'm Manus Cranny with Danny Berger in London. Would you go to see the Marvels? That is the question, because apparently it needs a few more dollars on the opening weekend. $47 million. This is a low point, Danny, for the Marvels franchise. Did you go? Would you go? Do you like it? Superheroes?
I mean, I went to go see Barbie, but I don't think I'd go see anything else. I think what this ignores, though, is there was the actor strike. No one could promote this thing. Like, of course, less people are going to go see it. Did anyone know it was coming out? I didn't know it was coming out.
I certainly didn't know it was coming out. I mean, I can remember back to 2008 when they launched. I mean, they've made, what have they made on this? Globally, this movie did $110 million. There's been 33 of these Marvel. I didn't realize that 33. Iron Man. Do you remember that in 2008? Machine. Where were you in 2008? I think I was having a crisis in 2008, something to do with Lehman's and markets and the implosion of my life at Cantor Fitzgerald in 2008, just from memory.
You mean you weren't just relaxing at a movie theater watching Iron Man?
I was just sitting back, relaxed, going, look at this equity market. Yeah. I'll have a job in the morning.
Life is easy.
We're gonna talk about US-China. Heading to San Francisco on Bloomberg Brief.
Venture capital, it's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others.
Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a three
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond. Welcome back to Bloomberg Brief. I'm Menace Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. The threat of a U.S. government shutdown looms again as Moody's lowers the country's outlook, citing political polarization. Goldman Sachs and Morgan Stanley diverge on their bets for a Fed rate cut. Investors now wait a key inflation data point due tomorrow. And Boeing versus Airbus, the two rivals are readying major orders in Dubai. We're live at the air show. Now, equity markets have had quite the run. We're up about 6% from the recent lows in October. U.S. markets have been higher 9 out of the past 10 sessions. We're taking a breather today, but historically that has not lasted. Usually we sell a little bit in the morning and find some reason or another to rally. So both S&P and NASDAQ futures down more than 0.25%. Morgan Stanley says they preferred the U.S. over EM. Goldman Sachs says we're too negative on profit warnings from companies. So the sell side seems cautiously optimistic. Meanwhile, in Europe, we're up about 0.6%. Manus, we're going to talk about this in a little bit, but it's the same stock that's driving things. It's Novo Nordisk, it's Wegovy. That weight loss medication cuts down risks of heart issues for those patients that are taking it. So those shares, Manus, up about 3% or so this morning.
Yeah, there's a nice bump in pharma. Have we moved to the last breath of 2023 of where perhaps greed overtakes fear, Danny? And that's one of the reasons why you're struggling to see a real movement down in terms of yields. Of course, Moody's has moved. The downside risks of the U.S. fiscal strength no longer fully offset the sovereign's unique credit strength. So no huge impact so far. Yields dip ever so slightly. We move to Tuesday. We got the fear and loathing of the CPI. We're looking for plus 0.3% for a third month. That will snap 6-month stretch that we've had of slowing price growth. And don't forget, Fed Chair Powell says he won't hesitate to tighten again. Then you've got the divorce between Morgan Stanley looking for 300 basis points of a cut kicking in June of next year. Goldman's a little bit slower, 175 basis points. But the issue is the fiscal warning there, the unsustainable trajectory. That's what Bill Dudley said. Dollar yen, you're 20 pips away from a 33-year low. 151.95 is where you want to be. Peter Kinsella was with us from Union Bancaire Privé. He says the downgrade by Moody's is justifiable. Oil's managed to turn it around since we last spoke. We're down 12% as Goldman, 12% in 3 weeks. We're going into the 4th week break-off trend as Goldman's downgrade, or they cut the 2024 view by $6 to $92 a barrel. Higher supply, Brazil, Venezuela, and Nigeria. And don't forget, those prompt spreads in the U.S., they've gone negative.
Yeah, and Manus, on the point of Peter Kinsella talking to us about a shutdown, this idea that the downgrade is justifiable, he talked about the idea that, look, it's not the debt ceiling, it's the debt level, perhaps echoing some of what Bill Dudley said. For him, the only way that the dollar actually weakens with this is if you get the shutdown and it lasts for a long time. So if you want to ask, why isn't the market reacting more to the Moody's downgrade and the debt ceiling drama, man, it's because it actually has to happen for markets to move. At least that's a thought from Peter Kinsella.
Yeah, and of course, with those shutdowns and with political angst or downgrades, typically the bond market actually reacts quite positively. So there's no irony lost in anybody. But of course, it is about the fiscal largesse, not not just by Moody's, but by the former New York Fed president as well, Dudley, warning. And take your mind back, go and read Powell's speech on October the 19th, because it's a cri de coeur to the fiscal largesse of the government administration at the moment. Let's talk about geopolitics, Danny, because the senior officials in Israel and the US have suggested that talks are intensifying around securing a release of the Hamas-held hostages. The US National Security Advisor Jake Sullivan spoke on Sunday.
There are ongoing negotiations involving the Israelis, the Qataris, and we, the United States, are actively engaged in this as well, because we want to make sure that we bring home those Americans who have been taken hostage, as well as all of the other hostages.
Well, the conflict has set off major political ramifications in the West, significant protests over the weekend, and a major cabinet reshuffle in the UK. The Prime Minister, Rishi Sunak, has sacked his Home Secretary for defying his authority over the handling of a pro-Palestinian march, and was accused of emboldening a far-right counter-protest which turned violent. Bobby Ghosh is our Bloomberg opinion columnist. The ramifications in the West we make a great deal of. You have a much more sober view. We're dealing with hostages, and you would say that the cultural and political confrontation that we're looking at here in the West is a distraction.
It's a sideshow, Manus. I mean, it's not unimportant for those who are protesting. We are seeing that there are political costs that some politicians, Suella Braverman, the latest, are paying. But in the greater scheme of things, the real story for me remains what's happening in Gaza and in Israel, where people are dying, and there's a prospect of many, many more people dying, and very little prospect of actual. We still, more than a month in, we still don't have a clear idea of how this ends. Israel has not yet properly communicated how it sees this thing ending. And of course, there's that whole business of the hostages who remain unaccounted for. We've been hearing officials from Israel, Qatar, and the United States say for weeks now that they are trying to get the hostages out. But beyond saying that, we've not seen very much happen on the ground. I understand it's complicated. There's a war on, and Hamas is famously an unreliable negotiator. But the families of the hostages, for them, this tragedy just continues.
Well, Bobby, there was also an Arab League meeting over the weekend. Is there any clear consensus from the Arab world in how to move forward?
No, and I think a lot of people in the Arab world would have been very disappointed with that. There was a gathering, there was a sort of bromide criticism of Israel, condemnation of the attacks on Gaza, but no clear direction on what needs to happen next. There's no clear demand for what the Arab leaders want to see. From the point of view of the world economy, and certainly from the point of view from the West, the biggest concern from that meeting would have been whether or not the oil-producing Arab states, the GCC states, were in a mood to impose some sort of an oil shock like they did in the 1970s, early 1970s. That did not happen. No. There's a division among oil producers on that subject. There are some oil producers which have liked to have seen some sort of a penalty being imposed on the West for supporting Israel, but there's no consensus as yet. However, if these images keep coming out of Gaza, that could change.
It's interesting that you touched on that. Khaled Al-Faleh with us at the New Economy Forum last week, being very, very clear with Stephanie Flanders that, you know, still the road to some kind of normalization was the objective. It's interesting, Emmanuel Macron told the BBC there's no justification for the bombing of Gaza and urged ceasefire. Germany's Olaf Scholz, of course, backing Israel's right to defend itself. So the splinters, the divisions in Europe are becoming ever more apparent. It's going to be a big week for Xi Biden. Do you think security will be solidly addressed at the Xi Biden summit, or what do you think the upside is in terms of the world for this meeting?
Well, the fact that they're meeting at all is very important. The two most important countries in the world, two biggest economies in the world. Just a few months ago, Xi Jinping was not taking Biden's calls. So the fact that the two of them are meeting is crucially important. Two of the most powerful militaries in the world have not been communicating with each other. That's a very, very unstable and dangerous situation. In a world where there are two live kinetic wars in Ukraine and in Israel, wars of enormous consequence for the rest of the world and for the global economy, it's not a good idea for the military leaders of the US and China not to be speaking. So if the only thing that comes out of this meeting is a commitment to resume those conversations, I would take that as a great move forward at this moment. I mean, there are important economic questions they need to address. Xi Jinping is coming to this meeting. For the first time in many years, a Chinese leader is coming to this meeting with a weaker hand, the state of his economy being as bad as it is. So Biden may not have the strongest hand himself. He's distracted by Ukraine, by the prospect of a re-election, and now with Israel. But Xi Jinping's hand is considerably weaker than it has been for many, many, many years.
What does that actually mean in practice for Xi to enter this having a weaker hand?
Well, he's counting on just the meeting itself. The fact that he's in San Francisco and he's being the center of attention, he's counting on that itself to give him a little bit of a boost back home. Remember, you guys have covered it extensively. The state of China's economy is very soft despite the recent quarter reports. There's a structural softness there. The real estate market is still in extremely parlous state. And the crucial thing is, of course, unemployment, youth unemployment, 20% when we last found out, and it's a very, very telling fact that China stopped reporting that number. When a government stopped reporting a number as important as that, it's got something to hide. And so this is, Biden will be fully aware of this going into these discussions with Xi Jinping, but, that's where the weakness comes from, and how much Biden wants to press on this, given his own concerns, we shall see.
Right, yeah, and we're just talking to Guy Johnson about China maybe ending the freeze on Boeing orders, so the issue of trade and China relations with U.S. companies is alive and well. Bobby, thank you so much for joining us on this Monday morning. That is Bobby Ghosh. Now, coming up, we're going to hear from Carlyle co-founder David Rubenstein on the resilience, he says, of private debt. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
It's Bloomberg Brief. Danny Berger in London, Manish Cranny in New York. Shares of Novo Nordisk are surging again after a key study backed the use of Wegovy, its blockbuster weight loss drug, to cut heart attacks and deaths in people with obesity and a history of heart disease. Joining us now for more on this is Bloomberg's Eric Fanner. Eric, Manis and I caught up with the Novo Nordisk CFO last week, and we were talking about this idea of, when does this get approved by more insurers? When does this seem as something more than just to cut weight loss? Does this take us a step there?
It does add another piece of the puzzle. I think that's been one of the big questions so far is, how much is this drug a lifestyle drug, something that, helps celebrities improve their appearance perhaps, and how much of it is a health benefit. So this does show that there is a health benefit beyond, independent of just losing weight, which obviously has benefits of its own. This shows a heart benefit that over time, could be really beneficial. How much it helps, that's still a question, of course.
So look, there's going to be more of these drugs come to market. There's going to be competition on pricing. So where does Novo Nordisk, they keep surging even though there's this competitive threat from Eli Lilly?
Yeah, that's right. There's a new drug, Mounjaro, from Eli Lilly that was just approved as well for weight loss. You've got a lot of other projects. Pfizer has a project in the works here that's coming, down the road. We even had AstraZeneca last week talking or doing a deal for a potential weight loss pill that would be similar to these and taken in oral form, which would make it a lot easier. Now, that one's way down the road, but obviously there's a lot of people trying to get in on this race. They see the potential size of the market, which some analysts have put at potentially even $100 billion, which would, be a huge market and even a lot bigger than it is at the moment taking shape. So I think that's what, draws so many people into it. That's why, potentially you've got room for more than one or even two or three players. But, just how big it is obviously big uncertain still.
Right. I mean, a huge addressable market. Eric, thank you so much for joining us. That is Bloomberg's Eric Fanner. All right, let's turn to the world of private capital. Funds managed by the biggest firms continue to highlight alternative asset outperformance versus public assets. Is it just, though, covering up volatility? Well, Carlyle co-founder David Rubenstein spoke to Bloomberg's Francine Lacqua earlier this morning.
Well, private equity is not doing as many deals as it did a few years ago. The cost of capital is higher, obviously, but it's not the biggest problem. The biggest problem is that buyers have bought things over the last couple of years thinking that they would sell them at certain multiples of return. And then sellers, sellers now, they turn out to be sellers, the buyers that were the buyers, they bought these things, now they want to sell them. When they sell them, they want to get a certain rate of return, but they're not likely to get that because the new buyers are saying we can't pay that much because the economy is slowing down and interest rates are higher. And so there's also a fear that you could go into a recession in the United States, and if so, nobody wants to buy into a recession. So I'd say the sellers are here, the buyers are here. There's a gap of 15% or so between the bid and ask, and that's why deals are not getting done right now.
So, David, what happens? Who's going to budge first, right? At some point, these two mismatches will have to come together.
Yes, the economy always works out in some way that there's a compromise between the two. But I would say right now people are waiting to see whether the Fed is going to increase interest rates again. And if they do not, whether they're going to begin to cut. And if they do, then I think people will feel a little bit more emboldened. One of the issues we have in the United States is there going to be a recession or not? Right now, I think the consensus is that there will not be a recession. But, those consensus change from time to time. So I don't know.
Yeah, and we're looking at, are you feeling actually any stress out there in the U.S.? We're looking at lending. I mean, there are these pockets actually of concern in the U.S. economy. There's
always pockets of concern. Right now, we're probably going to grow this year at 1.7%. So it's not recession-like numbers, but it's not 2 or 3%. I think the U.S. economy is still trying to figure out what the Fed is going to do. Is the Fed going to cut or not, and when is the Fed going to cut? And one of the issues that hasn't been talked about very much is the Fed probably is going to find it difficult to cut next year before the election. Because if the Fed were to cut interest rates before the election, obviously it'll be accused of helping the Democrats, and that would be very unpopular with the Republicans. So I suspect the Fed, to avoid political criticism, will probably wait to do any cutting until after the election.
Yeah, but at the same time, we also, if we have inflation at 4% and it gets stuck at 4%, it could be very painful for them to get inflation from 4 to 2%.
Well, getting from 4 to 2 is not easy. It's easier to go from 8 to 4 than 4 to 2. 2 is what we had for 25 years, but it's not likely we're going to get down there so quickly. So the Fed has been very consistent in saying we got to get to 2%. They have said a couple times, well, 2% within range of 2% or close to 2%. So it may not have to actually hit 2% before they actually begin to cut. But it can't be 3 or 4%. They made it clear they didn't want to go to 2%.
David, where do you see deals in private equity? Again, the private equity space is changing, also because of the lack of companies to buy. So you have a lot of money chasing the same assets.
Well, there are always going to be deals. People are always going to do some deals. There are deals that are going to be done in technology, for sure. That's a very hot area. A lot of opportunity is now available in, let's say, fintech and financial services. Athletics, sports-related thing is also seeing a lot of activity. So I think there'll be activity. I just think the prices that the buyers are going to pay is lower than what the sellers really want. Now, that gap is about 15%, and it'll probably close, but not for a while.
And that's across the board in the U.S., in Europe, or valuations in Europe have always been a bit cheaper. So I wonder whether it's easier to do deals.
Well, there's still a gap here. I think here there's some countries in Europe are in recession, in effect. And so I think many people are more nervous about it than before. But I do think there is equity available, and there is debt available for deals when the pricing gets closer to where people on both sides want to do it. I think their fundraising is more complicated now. Fundraising for new private equity funds is more challenging than it was a couple years ago, because of the called the denominator problem. Groups that have money have less to give out because their overall corpus has shrunk a bit. But there's still money there. People find good deals at a good price. There'll be money available.
Great conversation there, David Rubenstein in the studio with Francine Lacroix in London. Of course, Danny, it's interesting that he talks about the inability, or perhaps the issues around cutting rates aggressively next year in an election year. Therefore, they would be accused of being partisan, of being pro the Democrats. And then you look at Goldman's versus Morgan Stanley. I mean, they are miles apart in terms of where they are for their rate cut start and end point.
It's true. I mean, Ellen Zentner and team over at Morgan Stanley think that policy is going to end about 2.3%. Goldman Sachs, it's something closer to 3.5%. I mean, those are very different, and it's something that the market at the moment more citing on Morgan Stanley. But the Fed, let's be honest, Powell was hawkish last week. He still says higher for longer.
Well, one thing that you've got to get this housing market moving. Could you imagine a 300 basis point cut? What would that do? I'd be in the market, Danny. I'd be in like Flynn with a mortgage. I'd have a credit history then. I'd have 12 months of credit history. I'd maybe even get a mortgage.
Wow, I'm coming over your place then. I hope you have an extra bedroom for me, Manus.
Always. You just need to book that ticket and get here. By the way, Bill Dudley, over the former New York Fed president, we are on an unjustifiable trajectory for the fiscal warning. They're coming hard and fast. Coming up on the show, we're going to close it out Monday morning. Let's see what we've got. Market moving events for the week. CPI is the big one on Tuesday. We'll run you through your agenda right here on Bloomberg Brief. Look at that. The city of New York never sleeps.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Now let's take a look at what's ahead this week. In the U.S., we're going to get the latest read on inflation on Tuesday, then PPI and retail sales on Wednesday, and then another round of jobless claims on Thursday. Here in Europe, Eurozone GDP comes on Tuesday, UK CPI on Wednesday, and Eurozone CPI on Friday. Plus, ECB President Lagarde will be speaking on Tuesday and Friday. Then finally, we're going to get the retail sector wrapping up the earnings seasons, their results from Home Depot, Target, Walmart, and Macy's throughout the week. Now, Manus, there was an interview last week on a different TV station, which shall not be named, but from Target, saying that consumers are pulling back their spending. They're even pulling back on groceries. Is that because everyone's trying to save, or just is everyone already on Ozempic?
Okay. Well, we won't go down the Ozempic road. You're just tempting me there. I know you are. But
I am.
Well, the rich are pulling back in terms of expensive watches. Richemont, we saw their numbers down. Walmart is going to be interesting, Danny. We're expecting Walmart to say that their sales have dropped by nearly 50% versus last year. Yeah, there you are. I was wondering, you were hiding behind that screen. So they expect sales to drop to 4%. So that's less than half they were last year. I was in a store which will remain nameless, and they already had their Black Friday. I was trying on a couple of suits because my brother said my suits were a bit tardy. He said, "You're looking a bit slack." Yeah, he did. So 30% off. 30% off already on a particular brand of suits in a particular store. So there you go. There's already price cuts.
I'm jealous. I'm jealous of the New York deals. I miss them. And I saw they opened a Wegmans in New York City, in Manhattan. If you don't know what it is, Manus, you got to get over there. I expect your next Instagram video to be about the glory of American Wegmans and grocery stores.
I don't know how to follow that because I don't even know what they do. There's a lot of things in America I don't know an awful lot about. Dollar yen, I know a thing or two about that. A little bit of dollar yen. You can smell the 33-year low coming.
Yeah. I mean, just an inch away from 152. The last time we were here, Manus, the MOF, they were intervening. Is that intervention risk alive and well? That's it for us on Bloomberg Brief. Surveillance is up ahead.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
I think the market needs conviction that the Fed is really done.
This is a Fed that really made a hash of things with the great transitory fiasco, and they can't afford to be wrong again.
We've always been in the higher for longer camp. We're normalizing at a healthier level, which is going to help set the foundation for more growth, more earnings, more upside for U.S. equities.
At least through the end of the year, we're looking at still a pretty robust economy. 2024 is really the bigger question.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is crystal ball season on Wall Street. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly negative on the S&P 500. We're down by 0.1%. 2 weeks of gains on the S&P 500. TK, it's the most wonderful time of the year. It's outlook season on Wall Street.
Outlook season on Wall Street. Out they come with the guesstimates. What's great about this morning's soiree, Morgan Stanley versus Goldman Sachs.
Oh, yes.
They have the same inflation call, plus or minus 1/10 of a point. Boy, do they have different views on the spirit, the holiday spirit of the American economy.
Ellen Zentner, Morgan Stanley, that was good. You sounded interested for about 20 seconds. Keep that up for 3 hours if you can. Morgan Stanley, Ellen Zentner write the following. Slowing growth, easing policy. Bramo, this jumps off the page. Where they think rates will be, not in 2024, but in 2025. This is the call. Rates go all the way back down to the low twos, Lisa, in 4Q 2025.
The distinction between the Morgan Stanley and the Goldman Sachs call is a soft landing versus a no landing. And Morgan Stanley is basically saying a soft landing, and the Fed's going to cut a lot more than previously expected. The idea of interest rates going all the way back there underpins their bullish call on duration, their bullish call on U.S. assets. Here's the question. How do we sort of effectuate this kind of pain without seeing an unemployment rate rise above 4.3%, something that really has not happened before?
Look at the Fed speak this morning. Williams, Jefferson, Barr, Goolsbee. Do you think they want to go beyond December? Never mind 2025. Think about what we'll be doing on Wall Street in the coming months, trying to game out 2 years out.
Thursday at 8:31, maybe they'll want to go beyond. They got to get some key economic data this week. I mean, last week was a snooze fest, and this week is not. This is really 2 sets of data on the American consumer.
There are tons of economic data this week, CPI, retail sales. Bramo will go through the calendar for you in just a moment. I want to turn to a single name in the pre-market. The charm offensive that we could get from China this week could be phenomenal with this meeting between Xi and Biden. Boeing in the pre-market, slightly positive. A story that the team here at Bloomberg are writing up, Bramo, that maybe we could see a sales breakthrough for the 737 MAX aircraft in China when you get this sit-down between leaders Xi and Biden?
And this could be maybe one of the outreaches from Xi Jinping to the U.S. What I find fascinating is how different corporate diplomacy is from political diplomacy. And we're seeing that in real cold relief, because not only is it China, it's also Riyadh buying Boeing. It's also some of these other areas that have had some real tension with the U.S. of late, which raises this real question, and you both have mentioned it, that meeting that Xi Jinping is going to have with the CEOs in the United States might have more interest in import than the meeting with Biden.
Absolutely fascinating, and that $52 billion, and I assume that's spread over any number of years, that's 68% of the annual revenue of Boeing, to put it in perspective what this order means of one-year revenue. But what's interesting, John, is Boeing has really struggled within the broader sprawl. Their 10-year per year stock return is a moldy 5% per year.
Have you seen that San Francisco has been cleaned up ahead of Xi? I think cities across America sort of begging the Chinese president to make a visit.
So that it got cleaned
apparently
up.
What happens is you get the city's cleaned up, crime goes down, TK, it's a wonderful thing.
Yeah, well, San Francisco's challenge, we were talking to the chief of the Chamber of Commerce of San Francisco, Edward Ludlow, the other day, and Edward Ludlow said, contrary to the gloom, there's percolations of straightening out San Francisco. He mentioned a very important local election.
Interesting.
Where there was a changing of the guard. And Ed Ludlow, folks, the star of Bloomberg Technology, Mr. Ludlow said the beating up on San Francisco is maybe past.
Is that Ed's promo this morning?
That's it.
Are we done? How much did he pay you for that?
You know, I get a case of Anchor Steam, except they went out of business.
San Francisco, a cleaner city. Let's see if that lasts. Equity futures on the S&P 500, slightly negative here. We're pulling back by 0.1%. The price action looks like this. Yields coming in a couple of basis points. The 10-year right now, Lisa, 462.80.
And we're being informed that Ed Ludlow is speaking to the San Francisco mayor later this week. So just to give you a sense for today of why he is coming out with some of this. Eco data this week, as you were mentioning, Tuesday we get CPI, Wednesday we get retail sales and PPI. How much will it matter, right? We were talking last week about the fluctuations in Treasury yields and how these data points could actually set it up for more volatility. Does it even matter based on the fiscal outlook? And we'll get to that in a second. On the geopolitical front, Xi Jinping set to meet with President Biden on Wednesday in San Francisco. We were just talking about that. And on the domestic front, there's a potential U.S. government shutdown on Friday. And this is why I'm wondering, which data matters the most to the market? Is it going to be the economic data, or is it going to be the political data in terms of a potential government shutdown, a potential Moody's downgrade after being revised to a negative outlook? Is that going to matter more for Treasury yields and the risk premium that people are charging?
Elisa, thank you for that. We need to talk about the shutdown and the potential downgrade to the US credit rating from Moody's, the outlook chopped to negative. We'll have a big conversation about that a little bit later. Joining us now is Max Kettner, Chief Multi-Asset Strategist over at HSBC. Max's outlook season, get the crystal ball, look out to next year, maybe even beyond. Max, you've been constructive for most of this year. You've been right to be for most of this year. Do you think it's a repeat of that for next year as well?
Yeah, good morning. I think so. I think it's pretty unlikely, if not virtually impossible, that big asset managers or the banks are really changing their outlooks dramatically, right? Let's bear in mind, 12 months ago, the overwhelming sense was we're going to get a recession in the first half of this year in the US, right? China's going to do better. Europe's going to do better. And then obviously it went the other way around. And if anything, we've seen signs of overheating in the US. But what's not changed is sort of cautious near-term outlooks. What's not changed is that people are still rolling sort of their recession forecasts 3 to 6 months forward. If you look at earnings forecasts, for example, look at consensus earnings forecasts. S&P earnings are expected to drop by almost $3 from Q3 down to Q4 currently, right? And then by Q1, in the first quarter next year, consensus is still saying we're not going to be even where we were 6 months ago. So that's how low earnings forecasts are. If you look at GDP forecasts, it's the same. It's round about zero for the next couple of quarters. So we're still faced with this pretty bearish, pretty pessimistic setup, which continues to allow pretty positive surprises. And that's good for risk assets.
Max, you're right, the Goldilocks is back. I get that. But what I love here is you've been right about this market. We've got outlooks coming up. Ed Yardeni shifts the playing field for the optimists like you today, up 22% by the end of next year, SPX 5400. Can you give that scope and scale to a bull market?
Yeah, I don't think it's unthinkable because when we look at, let's say, the next sort of 6 to 9 months, again, we've got very low near-term earnings forecasts, very low GDP forecasts, and we're probably going to get, core PCE inflation below 3% by the second quarter of next year, right? So it's not miles away. It's not like we're talking about, sometime in 2025. We're talking about in 1 or 2 or 1.5 quarters. And suddenly, perhaps, real rates, the real federal funds rate is then going to be way, way, way too restrictive. And then the market and the Fed can start talking about rate cuts in earnest. And then, perhaps the curve disinverts. And on the back of that, you're actually going to continue seeing a pretty Goldilocksy environment, right? It's still going to be an environment, I think that's pretty much akin to what we had for most of this year, apart from the scare in September and October. So, this is still an environment where I want to be long consumer discretionary, where I want to be long tech stocks, where I want to be long the U.S. in particular.
Max, you want to be long U.S., but is it all boats rising? I mean, are we still going to see the shocking statistics I saw over the weekend of the focus on, let's say, forget about Magnificent Seven, say 20 stocks. Is this about breadth, or do they just continue to elevate?
It's not about breadth. So, Tom, you're entirely right. I think it's more a story of even more market concentration and of the big ones winning even more market share, right? Because let's face it, even there, earnings expectations, yes, they've risen, but they're not to levels where, it's absolutely insanely optimistic, right? And the problem, I guess, is in order for sort of the equal-weighted S&P, let alone the Russell 2000, so small caps to outperform, we would need to see a proper re-acceleration of growth. But the problem, of course, with a re-acceleration of growth, as we've seen in Q3, is that then most likely the long end of the yield curve actually starts to jump higher, and the long end of rates volatility also starts to jump higher, and no asset class likes that, right? Because then we're back to the sort of, is the Fed going to do a bit more? Are they going to do 1 or 2 rate hikes more? Or are they going to stay higher for longer, even longer, right? So the problem is that's sort of virtually impossible really right now to have, for example, things like small caps really jump on sort of an outperformance train right now. To me, it's much more a picture of the growth stocks, tech stocks, consumer discretionary continuing to outperform even in the next sort of 6-9 months. A lot of that smells like 2019, where the Fed can sort of really start talking about insurance type of cuts without really a recession, and with growth both on the earnings side, so the bottom up side, and the top down, the GDP side, continuing to really defy very, very gloomy expectations.
Max, are rate cuts next year going to be good for equities?
Oh yes, 100%. 100%, right? Because
the reason why I ask is because Goldman Sachs has fewer rate cuts than Morgan Stanley, and they also have probably a more positive outlook on risk assets. If the Fed is cutting more, ostensibly that's in the face of some more significant economic pain. Why are rate cuts still a good thing as they get deeper?
Because I think it's, like I said, it's probably pretty comparable to 2019, where we start to realize by the middle of next year, hey, you know what, core inflation is already below 3%. It might take longer, that we're actually going to go down to 2%. And our economists do have a little bit higher core PCE inflation forecasts, both for the end of next year and the end of 2025. But the important point to bear in mind is that real rates, right, the real federal funds rate is then going to be so massively restricted that actually the Fed can start talking about rate cuts, right, without a recession, without really us going, to below 0% GDP growth. It's going to be pretty fine if we're going to be between 1% and 2% GDP growth. Imagine a world where we are going to see a continuation of the first half of this year. Growth sort of 1 to 2%, slightly above or slightly below potential, not overheating, no real recession, but inflation, continuing to trend lower. The Fed starting to talk about rate cuts. The market's starting to price in rate cuts from H2 next year onwards. That's really, really good. It's as Goldilocks as we can really imagine.
Max Kentner says Goldilocks is back. Max, it's good to start the week with you over at HSBC. Thank you, sir. Morgan Stanley, we were talking about their base case. They have 2 other cases, the downside and the upside. Do you want to talk about the downside, Bramo? Of course you do. Lagged effects of monetary policy are tighter, and a protracted debt deflation cycle in China drags the global economy into recession. This is their downside bearish scenario, so bear with me. To ensure a mild recession, the Fed cuts rates rapidly to south of 2% from the first quarter of 24 to the fourth quarter of 24. That's some pretty aggressive stuff.
It sounds a little bit like the Fed put his back. I just want to put that out, that's sort of a question, because in that scenario, do some people get optimistic thinking, wait a second, in that case, then you get a bit of a boost to fixed income, then you get a boost to equity valuations, and kumbaya.
Well, kumbaya, we just put up a great board for radio. It was very clear that of the 4 attributes we put up, John, the best differential's the job economy, and that's what everybody's been stumbling on through 2023. Maybe we actually finally get a result next year, but that's the key variable, is 4.3% for Ellen Zentner.
We will stumble forward this morning for some fantastic interviews this hour. John Lieber of Eurasia Group in just a moment. Later on this hour, ahead of the Vegas Grand Prix, Formula One just around the corner this coming weekend, Toto Wolff, team principal and CEO of Mercedes-AMG Petronas F1.
What a different conversation than Christian Horner on Friday, John. It's been a tough year, hasn't it?
A tough year.
Did you speak to Sir Lewis over the weekend?
I didn't catch up with Sir Lewis. We can catch up with Toto about Sir Lewis a little bit later this hour. From New York City this morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open. Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Are we going to see a government shutdown?
Well, you know, we have the power of the purse, and look, we need more time.
So can Republicans vote together to pass this proposal, this short-term funding agreement?
We're going to have to. So, you know, I think what the Senate's going to do, they're going to come up with a package probably after Thanksgiving that they will send over to the House.
House Foreign Affairs Committee Chair Michael McCall speaking on CBS on the potential for a government shutdown. This following news going into the weekend that Moody's lowered the U.S. credit outlook to negative from stable. House Press Secretary, White House Press Secretary Jean-Karine Pierre saying it's a consequence of congressional Republican extremism and dysfunction. That's only partly true. It's also the consequence of successive governments in this country doing absolutely nothing about the deficit. Bramo, some of the numbers in this from Moody's sees the federal interest payments relative to revenue and gross domestic product rising to around 26% and 4.5% by 2033, respectively, up from 9.7 and 1.9 in 2022. they are huge, huge differences. This is not just about governance. It's about the debt trajectory of this country.
And the inability for governance to deal with that. And even though people are talking peripherally about this issue on the campaign trail, they're not talking about cutting entitlements. That would be a political no-go. And without doing that, it is very difficult to get to the numbers that Moody's, as well as S&P and Fitch, who've already made the move, will actually get behind.
Yeah, it's fascinating. And I like how they bring this out. What was that, on Friday at 6 p.m. or whatever? You know, it's totally, oh, by the way, we're going negative on the United States government. I really don't know what to make of it. I have a very clear memory of 2011 and a lot of fancy people saying, so what, to these ratings moves, except they did seem to have a big immediate impact. I don't know this time around.
So was it justified? Arguably, yes. And what you're asking is, does it matter? And I think that's an ongoing conversation. And Lisa, it's the same conversation we had back in, what was it, the start of August around Fitch.
Honestly, I can't imagine that it's not going to matter, especially given the indigestion that we've seen around some of the bond auctions and the fact that bond auctions have an increasing presence and an increasing influence over equity risk, as well as just general market mood. We saw that last week.
Moody's is making a rates call. This is higher for longer.
Yep.
That's the assumption. The underlying assumption of Moody's is get used to it. These are rates we've got to live with. And ultimately, it's going to get harder to live with here in America.
As we go to the politics, tangentially, maybe it's just an assumption by a bunch of fancy ratings people of a higher R-start, that it's, you know, a monetary policy that will be new. On fiscal policy, and very experienced, our next guest is wonderful. He demanded we have a shutdown clock. We do that here at Bloomberg Surveillance. We've got clocks for any number of things. 4 days, 17 hours, 41 minutes, 53 seconds to shut down. John Lieber knows the shutdown clock well. Over the many decades he is at Eurasia Group. John, thanks so much for joining from London this morning. We're riveted to the shutdown clock. What's the likelihood that the nation's going to turn into a pumpkin at midnight on Saturday?
Well, it's always exciting in U.S. fiscal policy, and the shutdown clock is fun to watch. But I think fundamentally both parties are basically aligned around not shutting down the government. So I think that kind of this situation looks like it did a couple of months ago, where you've got Republicans making demands for spending cuts, Democrats saying we don't really want to do that, but neither side really wants to shut down the government. And Republicans are now putting forward this plan to keep funding going through January for part of the government, February for the rest. I would bet by the end of this week that's passed, because unless there's some mistake or something goes wrong and these two sides decide they just hate each other too much to actually do this.
My quick read of the Moody's announcement was it was sort of a statement on civics in America. Are we going to go through a process now and towards the next shutdown 6 months out, a year out, where we yearn to go back to the system you knew working for McConnell years ago, or are we going to some new system of legislating and appropriations in America?
You know, I mean, the system is basically the same as it's been for the last decade, where one party or the other is trying to leverage these deadlines to get the fiscal policy they want. And you mentioned with the Moody's downgrade, interest rates and basic civics, but there's also demographics. And the U.S. demographics aren't changing. And because of that, you've got this massive increase in spending as there's more retirees in this country, while tax revenues remain basically flat as a percent of GDP. And what that means is the combination is you get more debt as a share of GDP. We've seen the stock of debt triple over the last 10 years, and that's probably going to happen again in the future. So I think this Moody's rating is, yes, about the short term, about higher interest rates, and about the dysfunction in Congress. But fundamentally, this country's on a bad path long-term fiscally. Neither party has any seriousness about doing anything about it. Even the Democrats, in what they called an Inflation Reduction Act, which was ostensibly designed to, yes, invest in green technology, but also reduce the deficit, couldn't muster a single thing that's an actual tax increase in there. They had to rely on these things they could spin as loophole closers. And in the end, that bill is probably going to end up increasing the deficit too. So there's simply no seriousness in dealing with this problem, and there won't be until there's a crisis.
Which raises a question of what it will take. And we were talking with Neil Kashkari last week, and he said he actually questions how much the fiscal concerns about the U.S. really are affecting benchmark rates in the U.S., saying that if this really were an international concern, you would see the dollar weaken. From an international negotiation standpoint, is the fiscal backdrop of the U.S. entering into the discussion more? Is it putting the U.S. in a more difficult situation?
Here's what's good. with China and other potential trading partners?
Yes.
Yeah, I mean, I think this is a factor for sure. The U.S. has relied both on kind of, foreign funding of its debt, but also the Federal Reserve as a marginal buyer of debt for this 10-year period of low and dropping interest rates. And that's now shifting fundamentally, where foreign strategies around U.S. debt are going to start affecting the interest rate outlook. And it's not going to be such a sure thing that the U.S. can continue to fund these massive deficits. However, all evidence so far suggests that when there's a flight to safety, U.S. Treasuries are still the place to be. The U.S. has the reserve currency. And despite all the issuance that we've seen this year, people still think that the U.S. is a pretty safe bet. It's got a deep and rich pool of taxable assets that you can get at in an emergency if you needed to. The big question is not whether or not the U.S. can repay or has the money to repay. It's if there's the political will to keep this going and what it looks like in a crisis where you might need to see an instant increase in taxes or something.
John, just looking ahead to Wednesday, we are going to get that meeting between Xi Jinping and President Biden. What are you looking for?
I think this is a very low bar to get over. The big celebration is the fact that they're meeting at all. I think a key question is if they resume the military-to-military communications that were cut off after the Pelosi visit. This would help de-risk some of the challenges that you're seeing in the South China Sea, where China argues the U.S. has been aggressively encroaching on their territory, the Philippines as well, and they've been sending these warning signs to the U.S. that telling them to back off. Resuming the military-to-military communications is a step at trying to help de-escalate those tensions. That's probably the most we can hope for. I'm really curious to see what Xi Jinping says in his speech to the American people. And I'm also watching what is his message going to be to U.S. corporate executives who are very worried about a sudden stop in their ability to do business in China. What message does he give them to reassure them that China is still a safe place for them to do business? I think those three things will be the most interesting to watch coming out of this week.
That last point is just absolutely huge and a big one for us all week. John, thank you. John Lieber there of Eurasia Group. That final point, Bramo, we keep going back to it. The one data point that matters for this conversation. Foreign direct investment in China has turned negative. That's a problem. This looks like a massive charm offensive is just around the corner this week on the West Coast.
Although the way that John Lieber framed it, I completely agree with you. The way he framed it seemed to be that U.S. corporations were desperate to get some sense of solidity. So some sense of the fact that the Chinese government isn't going to necessarily interfere with rapidly changing backdrops of policy. Is that something that they're going to be able to get from an offensive?
Maybe there's some bipartisan hysteria here. I thought David Rubenstein of Carlisle, and of course star of Bloomberg Television, was wonderful with Francine Lacroix today, where he just said, look, all of these threats and back and forth by the U.S., his word was unrealistic. And so you wonder if some realism is going to show up at this important meeting. I mean, we're at an unrealistic point right now. Okay, great. What's going to be the realism the day after this meeting?
I'm with Lisa. We talked about this on Friday. It will be a charm offensive, but what corporate America needs, what it demands, what it wants, is just predictable policy.
Is Elon Musk going to be there?
Predictable policy. I've got no idea who's going to be in that room. We'll see. I'm interested in that, whether the Walt Disney CEO, Bob Iger, is going to be there.
This weekend. I looked for you in your truck.
We can talk about that a little bit later. Futures on the S&P, negative 0.2%. Toto Wolff of Mercedes-AMG coming up.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Two weeks of gains on the S&P 500, ending Friday, going into the weekend on a strong note. Bit softer this Monday. We're pulling back by 0.2% on the S&P. On the Nasdaq, Tom, we're down 0.25% on Nasdaq futures.
You know, I came out of the surveillance nap on Friday before the Moody's fiesta, and it was amazing, the bid on the market on Friday, the character of the bid and
going
the
into the close
condition into the Nasdaq, and it's like, okay, the holiday season's starting. You know, I mean, some of us are waiting for after Thanksgiving, but
some of us are.
The holiday season is starting.
It's so much stick for putting my tree up this week.
You know, I mean, let's look at the tree. Bring the tree up on radio right now.
Okay.
This tree is absolutely extraordinary.
What tree is this?
This is the Pharaoh tree. it's a blue Christmas for John.
It's way too
That looks like a Tiffany's tree.
That looks like a Tiffany's tree.
Yeah.
We say good morning. I went below 59th Street.
You went to Tiffany's this weekend.
7th Street. What a wonderful new store. Thank you to John and all for having us over there. And this is a huge retail experiment.
Okay.
They put $1 gajillion into this thing, and with luxury slowing. And John, as you've led the way,
when you got that discount, how many seconds did you promise them on Monday morning? So I know.
I said,
so we can count down the countdown clock.
Pharaoh's afterthoughts with us, and she's looking at the ornaments. She goes, "These are like the ones John has."
Oh my goodness!
You've got tree envy, and you should just admit it. You are jealous of my Christmas tree.
But Mariah.
Okay.
But Mariah.
Mariah hasn't gone on the house yet.
Okay. That's,
May go on in the house this weekend. Enough.
All right.
Get to the bond market.
If the government shuts down or not, it's the Mariah differential.
Mariah's still going on if the government shuts down or not, okay? Yields are lower by a couple of basis points. I can't wait for the stick this morning. We're back to about 463 on a 10-year. We're down a single basis point or so on a 2-year, still north of 5%. What was interesting about last week, we actually had a really strong close in the equity market and just ignored developments in the bond market, Lisa. Yields were higher on the week for the first time in 3 weeks.
That's exactly what I was looking at, the fact that the bond market was not whipsawing the stock market just simply because the moves were not that significant. And at what point does this go to what Max Kettner's been talking about, where the MOVE index or the implied volatility, longer term and 10-year treasury yields will dictate risk appetite. As long as there's stability, it's all right for the equity market, regardless of where those yields are.
Lots of Fed speak through the next 24 hours. You're going to hear from Williams, Jefferson, Barr, Goolsbee, tons more through the week as well. We'll be talking about that. Let's finish on foreign exchange, Lisa's favourite currency pair, because we are totally unchanged on the euro at 106.86. 106.86 TK and going absolutely nowhere.
Yeah, very quickly, the euro yen is what I watched first this morning, and you've got a little bit lesser inflation in one of the measures in Japan, and you've got weaker yen this morning, and sort of on the intervention watch. We don't need a shutdown clock for that.
As the week grows older, the week gets more interesting. It's not just about the Fed speak, it's also about the data. Tomorrow, you'll get CPI, as Lisa mentioned a little bit earlier this morning. Wednesday retail sales. I think it's a really important data point. That's some of the price action under surveillance this morning. US shutdown risk lingering, despite a new compromise plan by Speaker Mike Johnson. The plan leaving out hardline conservative priorities like cutting spending and curtailing migration. Congress has Just days to pass a new stopgap bill before funding runs out after November 17th. There's the clock, TK. The House, Bramo, expected to vote on the measure tomorrow.
We always ignore this. Every time we mention it, we all groan. We hate talking about it. It happens all the time. Is this time different? And those are like the worst words to say in the financial world. But it feels like, especially with the Moody's warning that we got on Friday, something is shifting where people suddenly are paying more attention, and it is factoring in to how the market trades. It does feel like the risk is growing of some sort of disruption in terms of how high yields go, how much people imply an unwillingness to sort of just buy the full faith and credit of the U.S.
I push against your gloom, except I think you're right. I think there is a change.
Who's this?
It's like
got no idea.
walking
That
down
discount was good this week.
It's like walking down the street and Mary Poppins and Admiral Boone's got the weather vane up on top of his house and the weather vane's turning. I take your point. I think the 1 trillion interest payment is my starting point, but there's something going on here.
It doesn't mean America's about to default. Let's put it that way. You've almost got to say that up front.
Thank you.
It's a very different conversation. What it could mean is they have to finance these deficits at higher rates. A question we've asked 1 million times on this program over the last 12 months. Is this country, this government, losing the privilege of acting recklessly? And there's a really important line in the Moody's Outlook cut over the weekend. Let's get to some of the quotes from them. I'll share this quote with you first. Our expectation is that these higher rates and deficits, around 6% of GDP for the next several years and possibly higher, means that debt affordability will continue to pressure the US. Embedded in that is an underlying assumption that rates are going to stay higher for longer, and that ultimately, in the words of Bill Dudley, by the way, in the last 24 hours, the former New York Fed president, it puts this country's fiscal health on an unsustainable trajectory. Now, with regards to that line I used a little bit earlier, are we losing the privilege of acting recklessly? Moody's almost addressed that line themselves in the quote. Downside risks to the US fiscal strength have increased and may no longer be fully offset by the sovereign's unique credit strength. Those unique strengths, Tom, they had a unique privilege to act recklessly for a long, long time.
Right.
You can play roulette with the government shutdown. It didn't matter, you buy bonds. That governance issue is going to become a much, much bigger issue when you have to finance these deficits at much higher rates in the way that you've had to do over the years so far.
The definitive on this is Robert Hormats, of course, at Goldman Sachs for years in his public service to the nation. And Robert Hormats would say, if you can't get your fiscal house in order, you can't do foreign policy. And you wonder, with all the foreign policy we have now, are we distracted by this fiscal soup?
Two things. Janet Yellen disagrees. She thinks that rates are going right back down. Stop being so pessimistic about the path of interest rates. Right. That's number one. But number two, what's fascinating to me is that corporations seem to be moving in the opposite direction in the U.S. from the government. The government is looking worse from a credit rating perspective, but corporations in the U.S. are attracting greater and greater investments. And when you look at the look aheads for 2024, it is such positivity on the United States, on all risk assets. So the irony here of seeing the sort of deteriorating outlook for the U.S. government versus what we're seeing in corporate America, to me, is really a stark difference.
Balance sheets in America got stronger everywhere with the exception of one place. We had massive fiscal transfers to households in America. Household balance sheets improved, savings went up. We're still talking about that to this very day. A lot of people termed out their debt. I don't know anyone who owned a house back in 2020 and did not remortgage that house.
Correct.
And has a 2-3% mortgage.
Correct.
We've got one sitting next to me. That's households. Corporations, extremely low interest rates, record